Good morning, everyone. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. Time is 9:35 on the board, and the market just opened. Time is 9:35. I'm in a 0 DT put right now. Bears are here. Time is 9:35. I just left another contract on NVIDIA for 4.9. I have 2 left. I had 87% up since yesterday. My 0 DT on SPY from 2 minutes ago is up 34%, 20%. Time is 9:40. MACD and volume bearish. Time is 9:40. Bears are in control. Bearish. Three-third. I'm all out of NVIDIA right now, 100%. I'm out of 4 contracts right now in 0 DT SPY. Or 3 of them. I'm wussying out. Failed. 3.63. I have 3 contracts left on 0 DT worth $1,000 each. $1,100 each. Bears are in control. Right now. Alright. I don't give a fuck if the morning cycle could be nasty as fuck. Bears are in control right now. Off of yesterday, ripped down. Oh my fucking god. I hope I can fucking... 9:40. 9:40 bounce trying into 9:40. Let's see what happens. Fucking crazy. Good morning, everybody. Good morning, everybody in the WhatsApp group. Good morning. Good morning. BC, Gifford, good morning. Everybody up there. Garrett, good morning. Bulls are trying now, small time. QQQ showing. Morning cycle 940 trying to bounce, trying to trap. Just bounce. Trying to be epic or what? Second load. Test and bounce to the roof. And a bear trap now. HOD testing. Bulls are trying. I don't give a fuck. I'm in NVIDIA and SPY now. They can suck my dick. I'm in for NVIDIA for 3K. SPY for 3K. HOD broke or tested. 945 broke. 955 broke the roof. 945. 950. 647.42. 647.41. New HOD into 950. MACD and volume bullish and wind direction showing north now on SPY. Intra morning. Push up coming with a mega gap above. Morning cycle bear trapped. 940, 950. New roof. There's a roof divergence showing bears in danger, MACD volume in bull territory, and RSI bull territory. My two contracts, 3 now, 15% minus, NVIDIA -5, and SPY -10. Big contracts. 955 running up. There's a bear trap off a morning open. Overnight push down coming into fucking trap crazy. Bulls in control. Off a morning open. 940 trapped. Godly spike candle coming. There's no cycle confirmation rejection. Just showing massive bullish into 955 from 940. HOD roof testing on NVIDIA. Roof broken on the Qs. HOD divergence cleared. 940, 955. I have $600 worth of 0 DTs right now. I got grinded 648. You gotta learn cycles, man. Is it because market is closed? Why is it so bullish? I don't know if you saw what happened overnight, but yeah. Not sure if you understand what happened overnight. It's showing a bear trap like fuck. God damn, 650. These fucking 0 DTs moving like lightning speed. Thing went from 3.72 to 1.8 in fucking 20 minutes. Yes. That is lightning fucking speed. Bye. No fucking rejection. No fucking rejection. I have 4 0 DTs now ahead of one. 648. I mean, they really kill this shit. Guess so. And that's what they're showing. Holy fuck. Yeah, this morning cycle fucking crazy. What in the fuck are we talking about right now? What in the fuck is this? Man, they reject $3-4. I'm leaving 0 DT. This shit is brain dead. Fuck. Last day of the week, Friday. Today, Thursday. Fucking bullish. No, please don't bullshit me. Come on. This market is fucking bullshitting right now. Oh my god. What the fuck? I hate fucking morning cycles. Shit is fucking hope like crazy. $10.05. This thing could easily bear trap more than I feel like it could bull trap. Fuck. One god candle to VWAP. I'm fucking leaving everything close dated. Fuck me, please. Fuck. Shit. Sick. Morning is cycling at the top of the roof. 10:05. Fucking sick. Roof break on the video here. Shit makes me want to fucking throw up. Goddamn life right now, man. Bears are getting fucking squeezed right now. This candle is not showing bearish. What a nasty fucking burn. Like, what the fuck? What a rough fucking cycle burn. Shit is burning candle chasing right now at the fucking bottom. Almost the same as fucking yesterday. Pink line 649.40 touched. Oh god. Blow up again? They don't like no bears right now. They don't want no bears in this shit. What the fuck? Back the RSI looking crazy. No volume. I get that. Get rid of that comment, Gene. Makes you want to smoke a cig. Nobody's smoking cigs out here. Fucking nasty ass shit anyway. These are fucking nasty. 10. Every down being slow is not good. This shit is not good. No volume. It needs to be fast as fuck with volume, if anything. It's like fucking hoping on volume. Like, it's just kind of stupid. Like, there's so much volume overnight. And now there is none. Fuck. Nasty. Even 175 is at risk. The gap, like, what the f. 1 reject the VWAP. I leave 0 DTs. Come on. No blow up, no more. Don't do it. Go to VWAP and then decide if it wants to go back to HOD or not. Come on. Just this fucking once. Just this fucking once. Let me get the fuck out of 0 DT. I don't even want to load deep, please. Shit, it's so slow. What's fast is fast. With volume. MACD candle. What's slow as shit is undeniably slow. I should have left these 0 fucking DTs that open. Or like the morning cycle. And just fucking waited this shit out. And now I'm fucking goddamn. Now I'm in other bigger fucking setups. Stuck inside a cycle looking for 2 different cycles. This shit is not good. Very fucking manipulated candles. The fuck is this shit? It's crazy. The moment I let go of my 640 fucking H for a loss, I swear to fucking God, they're gonna pull back to 648 exactly. Like, this is so fucked. And the moment I think that it's gonna fucking run up, like, this is so fucked. This is stupid as shit. I don't know what to think. The MACD and volume and candle is all different. Oh my god. I might have to leave the 0 DTs and reposition. This shit is fucking hope to the maximum. It's not looking the best. It's looking the fucking worst. It actually is looking like end of the fucking week bullshit. For now. Holy fuck. What is this candle on QQQ? Huge breakout candle on the Qs. Something wrong in the fucking head. Quite literally. What in the fuck? Look at this MACD. What the f? Shit is fucking cooked. Oh my fucking god. My header is looking at the fucking candles right now like, the fuck is this shit? Under the new HOD. 10:20. The Bears are fucking cooked. This shit is fucking so cooked. Fucking god. I don't want to let go of this 648. Like, it's only $2 below. Like, it's actually pissing me the fuck off, though. I feel like it's gonna do this shit forever. I don't want to go through fucking this shit forever. Just no direction, chop it up. Everything but fucking the video looking weird as fuck. Like, what? It's doing exactly what the video is doing, like. What? It's been 1 hour, 10:20. Man, it's a lot of fucking time. Why the fuck does time fly by like fucking crazy? Fly by like fucking crazy. It's like nothing else other than waiting for fucking the video or something to fucking reject later. Like, this shit is actually crazy. Hope. What in the actual fuck is this? Fuck, please. Just need one nice red candle to VWAP. All I really ever want. Where is God? It's a good one. The fuck is wrong with me? Where is God? Sick candle coming in on SPY. What is this on the video? I might leave my 0 DT spies here in 5 minutes. I know it might go lower, but this shit is so sad on 0 DTs right now. I don't want this shit to get zeroed out, but like, I mean, fuck me. The candle really making me feel like it's gonna cycle today. Narrative. What happened yesterday? Scary as shit. All of them. You know what? They fucking data burned it into close yesterday and did it in like 20 fucking minutes. Some stupid shit. Yes. Go to VWAP one time. Time is 10:30. I can't say the MACD volume bearish because it's not even. NVIDIA is. SPY is not actually. What the fuck? So fucking goddamn perfectly controlled SPY right now. What the fuck is this? Damn, it's not even dropping. Like, holy cook. What the fuck? Holy cook. Ain't no fucking way. Oh fuck. Ain't no way. NVIDIA going lower and SPY is not. Is at the gap. You literally can't go lower. That's so fucked up. It's deciding. Are you still in 0 DT? Yeah. The shit is showing $500 loss. Market value $550, 46% down. I have 647 put for like $135. That got dragged down 15%, but it's cheap as shit. I have NVIDIA and SPY puts that are a little bit out. That got dragged down into the shit. I got in kind of too early. I want to leave so bad these 0 DTs. Fuck, I don't even want profit. I just want break even. Somewhere 648. 647.9. Come on. They trying to fucking eat it though. Holy shit. This is so crazy what they're doing these days. Oh my god. Hard to tell. Showing bear trap as fuck. Hoping to god it reverts this shit somehow. Now bear trap the 1, 2, 3, 4, 5, 7 minutes, 6 minutes. Can't even get no VWAP, near VWAP. There's no volume downside. Nvidia in neutral territory here. Like, what the fuck is this? A market at the roof. That's fucked. That's a cook. They want to eat it all. Zero DTs. Should I risk $600 fucking dollars? Man, I don't fucking know. This shit is actually kind of retarded though. This shit is one of the worst fucking bear burns I'm ever seeing. One of the worst. It's back into the fucking purple box. Like, this shit is one of the worst. Motherfuckers. Motherfuckers. What a fucking machine. $652.2. What a fucking machine. It's a fucking burn. That's fucking crazy. Oh my god. It's a crazy burn. God. SPY just went green. Recovered 1.6% and is bullish. I mean, I'm far as shit outdated, but this is doing crazy work. Like, what the fuck? Volume fucking hiding. God damn. Rich said, God, may God have mercy on us all. Man, yesterday coming in as a fucking island. Shit's a sick fucking. This shit is a fucking sick. Fuck. Joke. I mean, the gap filled on this shit up top. I hope to fucking God that means something, like, not just gap fill and stay up. Fuck. It might be time to give up on these zero DTs. Holy fuck. God damn. This shit is throwing so much off. Sad as fuck this shit is what it is. This is looking real fucking bad. 0 DT and every other thing right now. Holy shit. They hooked this shit up so crazy. Holy fuck. They hooked this shit up so crazy. VWAP at 650 now. Shit. Nothing looks fucking bearish. Cooked the open off so fucking hard. I'll even take 650, like, please. Holy fuck. On these 0 DTEs, like. Someone said 666. Holy, please, man. Don't say 660 now. Fuck me. This shit is terrible. I'm about to start averaging out of my 0 DTs as they go lower here. I have tiny, but I still lost 500. It's like 50%. I still lost like half of 1K on it. It's not good. I haven't sold any on my older contract or the bigger contract, so I'm not taking a loss on that, but still this shit is a fucking major rally. It's a major. The market coming in so hideous. I guess this is why people look at, people that are interested at the stock market fucking weird as shit. Because, who would like people that are interested in the stock market, right? This thing is actually weird. It makes you fucking weird. Like, what am I saying? It's actually true though, like, it makes you fucking weird. Hope. No crush, please. I think the 0 DTs from earlier is trashed. They might be trashed. It's just to find a new cycle at this point is a little nice down. Come on. I would love to see it, but I mean, the chances are so fucking low. Like the MACD actually is so fucking slowly growing. It is so like every fucking minute it's like they're allowing. The fuck is this? Balance is thick. Fuck this shit. Damn. What a fucking shit day, yeah. Cycle happening. Came in trappy. The zero DTs are fucked. I left half at 1050, but still, like, yeah, no matter what. Today is coming in. Trapping off the fucking floor like that. With the pre-market doing what it did. Kinda wild. Wow. What the God candle 1035? Like what the fuck? How the fuck does this shit just magically fucking appear? Minus 1.5% just regained. QQQ2. 0.00. They fucking roasted these puts on a burner. On a goddamn burner. And 177.5 and 640 fucking 7. Fuck. In 8 days fucking time. Fuck. I don't want to fucking do this shit, but I'm not letting go at this fucking loss, so fuck. Fuck. That shit doo doo poo poo. They be popping and dropping on the fucking oil shit is fucking retarded actually. Only way to fucking reload here though is fucking nuts. Bears are trying. I'm not fucking doing new shit here. Fucking retarded. I'm not even adding nothing. No, I was thinking about adding 3K into older contracts, but I'm not even gonna do shit. Bears are trying. So It's already 11 a.m. Life's so sick, man. $11:05. They got me on such a spike fucking goddamn day setup too, like uh this morning. See what I decided to go to the gym starting today. Like heavy. I don't know how I'm gonna have fucking time during the day. Eleven, 10. Is it nice? Who knows? Who knows what is nice? 'Who even knows anymore, bruh? What's this purple box gonna fucking do today? They went bullish in the morning after they went bearish overnight. No way. bears are not here on SPY. This is getting crushed. Getting crushed. As long as Nvidia and SPY pulls down like $6 today, I'll be good. If it doesn't pull back today, then I need fucking $8 by fucking tomorrow, which is not good on Monday. So if that's the case, I don't know if I want to hold to the weekend like this shit. I don't know. This is a video from fucking yesterday. Talking about Nvidia.
It gets clobbered and then starts crawling back. You always hold out hope that there'll be a broad advance, lots of different groups powering higher, easily accessible to the masses that might have been blown out by the just endured decline. As we pound our way through our second day of this rally, I can definitively say that, well, this is not one of those moves. This one is limited, small, it lacks any real leadership that you can hang your hat on, at least so far. It's worth filling you in on the disappointment. After a seemingly strong day where the Dow gained 224 points, S&P jumped 0.72%, the NASDAQ went up 1.16%. Because I want you to understand my skepticism now about the rally. I was looking for more today. Why don't we start with the big winners so you can put them in context? They're heavily involved with one industry. I want more than that. The data center, of course. First, we have the big four of memory: Western Digital, SanDisk, Seagate, and Micron. We often hear that the world's short of memory and storage. And what they really mean is that we need to store a lot more data for AI to comb through. These four companies make storage. They're semi-constant presence on the new high list. How come? Because memory was a bad business for so long, almost a pure commodity, low margins. So when it turned out that they were sitting on a gold mine, thanks to the rise of the data center, well, they were caught flat-footed. Only Micron is adding capacity at scale, and it's still sold out near term. So are the others, although they're trying to build new kinds of storage, but that's for 2028 and 2029. They just can't build capacity fast enough, and until someone can build a different kind of storage, their stocks might continue to roar higher, even as a purist like me doesn't want the market to be led by the stocks of companies that are basically sold out and can just raise prices but not do more than that. We want to be led by companies like NVIDIA, which are producing product and selling it as soon as it comes out because it's so desired. NVIDIA deserves a premium price earnings multiple. These companies, not so much, but NVIDIA really hasn't done much of late. The second group of stocks leading us higher are the fiber optic plays that help transport data within the data center. Now we're talking about Lumentum and Coherent and Ciena. They're all part of the data center plumbing. NVIDIA has put $2 billion each into Lumentum and Coherent, cementing their relationships, good investments. Again, not a lot of companies in the fiber, network, and connect business. Semiconductors and companies related to them are always on the biggest gainers list. This time it's Intel that's leading because the company's buying back part of an Irish facility it sold to private equity when it really needed money. So, see, it's a sign of strength that they're buying it back. Intel's balance sheet, after teetering for so long, is now rock solid. Then Teradyne squeezed in the top gainers list. That's all about semiconductor test and measurement equipment. Again, narrow, narrow, narrow. Finally, a lone non-data center, non-semiconductor stock appeared on the list. It's Newmont. Newmont Mining, what a classic letdown to be led by a gold miner. Not even the best one, which is Agnico Eagle. Listen, I love growth stocks. I talk endlessly about the need to invest in growth stocks. Only a handful of these winners are actually growth names. The rest are companies that raise price for a living because they're benefiting from shortages.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to
You. The news, man. What the fuck is this? And then it fucking recovers everything. Stock market plunging.
Start with President Trump's address last night to the nation about the war with Iran. He said the military has accomplished a lot in the past month of the conflict, but there will be a few more weeks of fighting ahead.
What the fuck?
I've made clear from the beginning of Operation Epic Fury that we will continue until our objectives are fully achieved. Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
For more on how the president's address last night and how it's impacting the markets, I welcome in Kevin Hanks, live from the CBOE, our pre-bell playbook. I mean, there was so much within this, of course, talking about, you know, being ready to hit them extremely hard in the Stone Ages and put them in the Stone Ages in the meantime, really trying to wrap it up in 2 to 3 weeks. But oil really moved higher. Stocks are selling off.
Good morning, Nicole. Yeah, I watched every word of last night's speech and the ensuing reaction from futures and stocks and crude oil. And most people, I left frustrated at what I heard. But then I thought about it. Remember, the Trump administration believes in pressure, right? They're pressure. And I realized, because I thought the message was missing his point until I realized something, Nicole. Who was he speaking to? I don't think he was speaking to the American people. I think he was speaking to Iran, putting more pressure on them to settle. I think he was speaking to NATO for them to get involved in the Strait of Hormuz. I think he's putting pressure on all these groups to get involved or move in terms of the negotiations. Now, it's going to cause some volatility, but you have to be real careful, and the mainstream media and the financial news media is pouncing on this press conference from last night or this speech from last night and the negative tone. But if you think about it, who he was speaking to, maybe it makes more sense. Now, what should happen if this is true? You should see a flurry flooding the zone with positive headlines. And when that starts, I think that could be a trading event. So you have to be real careful here with where crude oil is, with where the overall futures are down in the VIX. I think this is going to be a real interesting day, Nicole, that is frankly just getting started and not over yet.
Yeah, and look, I mean, the U.S. can step out at any time. They are saying that they are happy to support their allies and what's going on, but at the same time, the allies need to step up and go take the Strait of Hormuz. Go get it. I mean, you need to cherish it. It's where you get your oil. We don't necessarily need our oil through there. Go get it. And so, look, the U.S. will stick around, but they certainly want to see some coordination from some of the allies as well. In the meantime, I mean, we're going to have a great conversation on investing in this market that is commodities driven, but it's not every day that I see West Texas more than Brent crude. I don't even know if that's right, what I'm looking at, but I do see West Texas here now at 112. That's creeping up to that 119 high we saw 2 Mondays ago. Was it 2 Mondays?
Well, a lot of the reports today when talking about crude oil is the fact that the two contracts are strangely close. Be careful, because remember, one is a May contract and the other is a June contract. So that could, the fact that there's only 19 days left in that May contract in light sweet crude, that could be injecting more volatility into that. So that is certainly something that's happening, but it may have to do with the fact that one is a May contract, one is a June contract, Nicole.
Yeah, you make such a good point, because yesterday I was talking about the Brent crude contract rolling over. So yeah, so that is where it is right now, 109. But the point is, it is up 8%, and that is notable. So I'm glad we have the live Brent crude chart there. And you make a good point about the contracts, because I did note that yesterday that we saw the rollover of the Brent crude contract. So we'll watch for all of that. And March 9th was when we hit the 119 level on West Texas. In the meantime, jobless claims, we're waiting on the jobs report tomorrow. By the way, jobs report tomorrow, the stock exchange is closed, but we will have something for you on social media. I'll be putting something together, so I'll be watching the numbers really closely, and we'll release those very quickly tomorrow on social media, folks, so make sure you tune into that. In the meantime, let's talk about some of the jobless claims.
Jobless claims, first-time filers for unemployment insurance, another historically low number, 202,000 first-time filers for unemployment insurance. That is historically low, staying low, even though the Challenger job cut showed 60,620 corporate layoffs. They're just not showing up in any of the numbers. Now, tomorrow's number, where we'll get job or non-farm payrolls and unemployment, that's going to be key to that going forward. But the weekly high-frequency data that we get from the labor market is showing still a very, very low jobless claims numbers, Nicole.
All right. Thank you, Kevin Hanks. Always great to see you. Thanks for coming all the breaking news with me each day, Kevin.
Now down by about 535 points. Kevin, we've been doing the same rinse repeat cycle for weeks now during the war, watching the price of oil and then moving in the opposite direction for equities. We thought maybe yesterday we were through some of that, but that does not look to be the case this morning.
Yeah, certainly. The same market refrain continues, Becky, as when the prospects for a resolution in Iran go up, oil prices go down and stock prices go up. On the other hand, when the prospects for a resolution in Iran go down or get extended, as we saw last night, oil prices shoot back up, yields go up, and stock prices go down. So I think these short-term bouts of volatility are going to continue for the foreseeable future. But let's just say, for argument's sake, the resolution does materialize within 2 to 3 weeks. Then at that point in time, investors will start to shift back to all the underlying themes that were resonating in the market. And I think those themes can be found if you just follow where all the money was spent last year, is being spent this year, and will likely be spent for the balance of this decade.
You know, Kevin, the concern with that, though, is AI. The AI trade was not doing all that well ahead of this. We knew that the money was going to be spent, but all of a sudden Wall Street was looking at it a little differently, concerned about the cost, the capex of all of that, what that would mean, whether there was profit on the other side of that. What's your take on where we should be thinking about AI at this point?
And it's a legitimate concern, Becky, but I think focus less on who's spending the money and focus more on where the money is being spent. I've contended for a long time right now, if I could just use a baseball analogy in terms of what inning we're in the AI revolution, we're still in batting practice, and there's a double header of games ahead. Batting practice involves all the AI infrastructure spend, and the games, when they ultimately take place, will involve the transformation of the economy and society using all these intensive AI algorithms. But we're not going to receive return on investment for years to come. So focus on where the money's being spent right now, and that's on AI infrastructure.
I hear you, and we've heard similar things. We had the CEO from Valley Bank who, makes loans to all of these subcontractors and contractors who are building out the AI infrastructure. His loan book was up 30 to 40%. So I hear you follow the money. But if sentiment on Wall Street changes more permanently and the idea of capex is frowned upon by investors, you are not going to continue to see the big hyperscalers spend quite as much money. At least I wouldn't anticipate you would, unless Wall Street tends to look on it a little more kindly. Or am I wrong on that assumption?
Yeah, I don't think the hyperscalers scale back that much in terms of their spending plans, at least not for 2026. And I think a company like Eaton Corporation, for example, the big industrials conglomerate that actually just recently purchased Boyd Thermal to buy their cooling solutions to tie into their data center construction business. Even if the AI revolution goes away, Eaton Corporation still stays in business, but they're benefiting from the AI revolution. A lot of people are concerned with Micron Technologies right now. As far as I'm concerned, the AI revolution comes to a screeching halt without power, without memory. When I think of memory, I think of Micron. When I think of power, I look to the utility companies. And utility companies provide a good ballast during these periods of volatility. They typically pay good dividends, and they've also become a backdoor play into the AI revolution. So I think that's a smoother way to play the AI revolution going forward, Becky.
Kevin, where do you look at the higher oil prices and what that might mean, either from an inflationary perspective or what it might mean from a growth perspective, if it slows down the consumer, if it slows down other businesses related to the consumer?
Yeah, I look at the most recent GDP Now forecast for Q1, which is lower to 1.9%. A large part of that is due, obviously, to high oil prices, which limits the ability of the consumers to spend. Remember, of course, 70% of our economic growth comes from consumer spending. So the longer oil prices stay higher, the less consumers will have to spend, and the more the economy will slow, which puts the Fed in a very tricky place, right? Because oil prices have inflationary pressures, which would mean they may want to actually raise interest rates. They shouldn't, but they may. And the economy may slow as a result of that, which means they may want to be more accommodative. So I think in all likelihood, the Fed stays where they are. Of course, we'll see if things change when Kevin Warsh becomes the new chair. But for the foreseeable future, I don't think the Fed doesn't do anything. And we're going to have to wait for a resolution in the conflict to actually see some respite with respect to oil prices and inflation.
Your job doesn't stop. Neither do we.
What a fucking horrendous environment. Literally. Midday. It's fucking destroying everything. How the fuck? Mega bullish. Mega bearish. Mega bullish. What a literal fuck show. crazy fucking bullish this shit is. Like, what the fuck? It looks fucking absolutely fucking perfect on the 5-minute. SPX is even more bullish than QQQ. Like, what the actual fuck? $11.30. Just mega bulls on the video today. Like, what in this shit? Alright. You know what? Story of my life looks like crazy. It's like chopping even more harder than yesterday. There's actually some sort of chop going on here. This pequeño candles. Yeah.
On EV stocks, Tesla just releasing its first quarter delivery numbers this morning, and we'll dive into the numbers with Marley in a second. Let's take a look at the board right now. Tesla is down despite some of these numbers we got out this morning. We'll get you across the details in a second, but BYD is lower and so is XPeng, despite the fact that actually the Chinese EV makers didn't come out with bad numbers either for the first quarter in recent months too. But obviously, as we've been saying, a bit of a tough tape today, but Rivian is a little bright spot, 1.5% higher. So mixed across EV stocks, and obviously a lot of attention on these as well with these higher oil prices. Been catching a bid lately. Obviously, you've had Canaccord, which has been talking about Tesla this week as well, sort of thinking that maybe we shouldn't be giving up on the EV story just yet. Particularly as the focus has been robo-taxis. But let's focus on Tesla and these numbers with Marley. Very good morning to you. Just walk us through the details here, what we got this morning with the delivery numbers from this company.
Morning to you, Sam. What we've got right now is an almost 4% move to the downside for Tesla after they released their delivery numbers. Now, these delivery numbers are about as close to sales figures as we get for Tesla because they don't release sales numbers. But for the first quarter, they reported 358,000 vehicle deliveries. That's down 14% from last quarter. That showed a drop from the prior period. It was mild growth from the year earlier period, but important to note, Tesla has recorded annual declines in the past 2 years, Sam. As far as those vehicle production, it was 408,000 and some change there, but both of those numbers came in under expectations. For that important deliveries number, missed the street's estimate for 370,000, but perhaps even more importantly, it missed the company-compiled consensus that Tesla published on March 26th, so just last week, where the average estimate was calling for 365,645 deliveries. So they missed their own estimate, and now they're down almost 4%. Now, deliveries did improve 6% from a year ago, but the first quarter of 25 marked a decline of 13% over the first quarter of 2024. So they do have quite a bit of movement sometimes in these numbers. They also saw total deliveries for 2025 fall to 1.64 million from 1.79. Now, their most popular vehicles remain the entry-level Model 3 and that most popular Model Y SUV. That accounted for 341, almost 342,000 of the 358,000. Now, Elon Musk has been very open, though, about how he is refocusing the company to focus on that driverless cab, on the Optimus humanoid robot. But they don't sell those products yet, Sam, so they still rely heavily on auto sales for the bulk of revenue. And they're so devoted to this that they're actually ending production of its flagship Model S and X vehicles. They're going to use those factory lines, which are in California, to produce Optimus robots. But again, not selling those products just yet. It's not a revenue stream. The 3 and the Y account for roughly 97% of the company's deliveries last year, so it makes sense.
What are these scandals?
But you know, when we rely so heavily on these auto sales, despite not wanting to be identified as an EV business, you need the numbers to at least match your own projections.
Yeah, it's interesting. We were talking about this yesterday. How do you value this company? Car company, tech company. I mean, the folks at Canaccord say that the sales still matter, even though the US is improving, but meh, as they say. But I learned something new. I know the Cybertruck is called a Cybertruck, but I didn't know it was an actual pickup truck. It was dragging a trailer in that B-roll. I only just see them driving around Jersey City. So anyway, you learn something new every day. It looks like something from Mad Max. Marley, thank you so much for joining us today and breaking down the details of these deliveries. Let's trade Tesla now with Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Very good morning to you, Joe. How are you approaching example trade this morning with Tesla, everything that we got today with these Q1 deliveries?
Yeah, and a good morning to you. Tesla is a very tricky company in a very tricky market right now. I like it for the long term, for the very short term. Just things are so uncertain. I think protection to the downside is very prudent for me. So as an example trade, and maybe this works for a lot of other stocks too, I'm looking for a limited downside return because we do have a lot of volatility in the market. We have the VIX at around 27. That means that volatility is very expensive to own. So if I'm going to look to trade to the downside, it's going to cost me a pretty premium to do so. What I'm looking to do is to buy a condor, kind of pick a price target, maybe not expect a huge dramatic decline in a very short period of time, but instead a steady, calm, measured decline into my price range. That's what I've done here for my example trade, looking at Tesla, just looking at the 360, 350, 340, 330 condor. That range I'm targeting is between 350 and 340. This morning it was priced at around $1.60. If we get in that sweet spot, it'll turn into $10 on expiration.
All right, Joe. Getting a first chance of response to the markets, which just flipped green. We saw the London FTSE taking the lead there. Now the S&P 500 is up just a fraction there, 65.40 or so. Just walk us through your thoughts on the overall market performance today, given Trump's comments.
Oh, yeah. So very tricky market, like I've been talking about. We're waiting for a dramatic headline that's going to dramatically save the market, perhaps. But bottom line is this. It's really going to come down to oil and the length of time oil stays elevated. Now, things are a lot better domestically in the U.S. When it comes to oil. We make a lot of the oil ourselves. There's a big portion of our economy, of course, that's going to benefit from increased oil prices. But there are places, of course, around the world that do not have that benefit. Volatility in one place of of the world has the capacity and has the likelihood of rippling across to other marketplaces. So if we see Japan, Korea, Australia, places like that that are very tied to the spot price of oil, their economies start to falter, it will filter over here domestically, regardless of any benefits we have from higher oil. So this is just something we have to watch out. Higher oil is going to be a dampening effect on the economy. The sooner it gets back down, the better, obviously. But there are other aspects, maybe long-term aspects that are, regarding the war that maybe the market can also price into. But for the short term, we just looking at the economic strength that is going to be tied to this oil.
Yes, and no doubt the market is reacting to something. We will confirm that once it does come through. But whatever is happening right now, oil off the session's highs, stocks off the lows. We're trying to recoup 6,600 here. We did, in fact, do that just as we were speaking, but we will continue to keep an eye on these markets as we approach the long weekend. Joe, always appreciate it. Thank you so much. Joe Tigay there, Portfolio Manager of the Rational Equity Armor Fund.
It's an insane bullish control looking day on the video. Fucking insane. I don't even know how to describe the words because there are no words. Oh, he's bad with words. It's not good. Yeah, now. Well.
Morning, David Kelly, JP Morgan Asset Management's Chief Global Strategist, joins us here at Post 9. Good to see you, David. Thanks for coming in. You willing to look through the next couple of weeks of activity in terms of military action?
Over the next few weeks, yes, because I mean, there's no way this is not going to end with oil coming out of the Persian Gulf. Ultimately, the United States is going to have to come to some agreement with whoever's in charge in Iran to allow U.S. oil and everybody else, well, not so much U.S. oil, but oil go out to the world, as well as everything else that comes from the region. And the price of that is going to be that Iran is going to be able to export stuff too, because there's no other end game possible here. So I think you do have to look past that and then look towards the rest of the year. And meanwhile, I think the U.S. economy's got enough going for it to keep growing slowly from here.
But you brought in, I assume, your GDP estimates for the year?
A little bit, yeah, and part of it's obviously this oil effect. Also, the refunds aren't quite as strong as we thought they'd be so far. So taking down growth a little bit in the second quarter. But remember, we could also get some further stimulus checks. We talked about tariff rebate checks, and the tariffs are gone or are lower than they were. But I still think we're going to get these tariff rebate checks to try to pump up the economy before the November elections.
You mean the refunds from the illegal tariffs or an actual rebate?
I think the refunds will slowly get back to the importers, but I think that Congress will pass a tariff rebate check or some other stimulus. I don't know how they're going to justify it, but they will do this, I think, over the course of the summer to make sure the economy is looking strong by the fourth quarter.
You talked about growth. What about inflation, which is once again a big debate with oil well above $100, and it doesn't seem like it's going back down anytime soon?
Not soon, but I think it's sort of 2 steps up, 3 steps down. I think by the middle of this year, by June, we could be looking at 3.5% year over year, maybe even close to 4% year over year on CPI. But by the end of the year, if we're right in oil, and you've got lower tariffs in the fourth quarter this year than last year, and you've got falling shelter costs, which we're seeing also, all that tells me 2% by the end of the year on CPI, and I actually think below 2% next year. In fact, next year I think we're going to be below 2% on both growth and inflation.
Oh, you're more dovish than the Fed overall.
Well, no, absolutely, because I think that this is a temporary oil issue, and I think it's a temporary tariff issue. And the end game here is this economy is really only capable of growing about 1.5% long term. So I think both of these things, both the tariffs and the oil, are going to fade over the course of the year, and we're going to just slow down as we go into 2027.
So are you not a believer in any kind of AI productivity boom, or is it just too early?
But the thing is, it has to be all AI productivity boom. Because of what's going on, the working age population is now shrinking by about 20,000 people per month. That means that all the economic growth is essentially going to have to come from AI productivity. And the productivity numbers are good. I think they will be good from AI, but there's only so much you can hope that it can do.
That's the sound of an American oil company hard at work.
It literally can't go lower than here. That's fucked. That is fucked. Contract fucking going a little bit and candle green, and then the candle comes in slight red, and then nothing.
The war in Iran disrupting the global balance of power as the president threatens to pull out of NATO, tells other nations to go to the Strait of Hormuz and just take the oil. Our next guest says the conflict has put China in a stronger position relative to the U.S. Joining us this morning, a former Morgan Stanley Asia chairman, Stephen Roach, senior fellow at Yale Law. Stephen, it's a pleasure to see you again. Thanks for joining.
Great to see you, Carl.
A lot of ink spilled this week about how the rest of the world views U.S. security guarantees from here on out, and whether that is a net benefit to Xi Jinping.
Well, Carl, April 2nd, today is a good benchmark. Today, the morning after Trump's nothing burger of a speech that really didn't describe anything that you could call strategic, and is completely inconsistent with this effort to develop a national strategic strategy published a few months ago. Compare that today with a year ago when he rolled out the Great Liberation Day tariffs against the entire world that were recently just declared illegal. You've got a disruptive president enacting personalized, whimsical policies that make no sense legally or strategically. Xi Jinping represents a China who attempts to think strategically. They've done that for years, and I think the comparison between the two of them is day and night heading into the May 14th, 15th summit in Beijing.
Right. How do you think the Chinese leverage this then?
I think the Chinese just play this as they have been, not in any aggressive fashion, but just sitting back and watching the United States under Donald Trump continue to act in a way that is not befitting its status of the world, and China almost wins by default here.
You think China will step in, Stephen, and police the Strait of Hormuz to help some of its allies in the region get their ships through?
I don't, but that'll remain to be seen. I think that the U.S. started the war, and the U.S. has responsibility for, I think, cleaning up the consequences of the war that it started, and by abrogating those responsibilities in the Straits of Hormuz, I mean, Trump is walking away really with a classic defeat on its hand and trying to hold others accountable for that.
There are those, Stephen, who posit that, in fact, China's ability to source oil from different parts of the world has been compromised, whether it be Venezuela or Iran.
My stomach hurts and my head, so. I'm gonna run to the bathroom for like 5 minutes. I'll be right back. Of course it's going down now.
Elevated redemption requests for two of its private credit funds in the first quarter, according to letters to shareholders that came out this morning. The firm's flagship OCIC, with about $36 billion in assets, received redemption requests of about 21.9% of shares outstanding during the first quarter. Blue Owl's smaller tech-oriented fund, known as OTIC, received redemption requests of 40.7%. during the same period. Blue Owl attributes this to, quote, heightened market concerns around AI-related disruption to software companies. In both of these funds, Blue Owl opted to cap these requests at 5%, meaning in OCIC, investors could redeem about 1/4 of what they wanted, and in OTIC, it was about 1/8 of what they wanted. Blue Owl, which is unique actually in having two of these non-traded private credit funds, is also among the last to report redemptions. The firm's percentage of redemptions is multiples higher than their peers. Most firms have opted to use that same 5% cap, but some, including Cliffwater and Blackstone, allowed slightly more redemptions during the first quarter. Blue Owl's OTIC Technology Fund saw redemption requests of 17% in the prior quarter, in the fourth quarter, which it did fulfill. OCIC's requests were 5% during that period. And these are also two of the funds that hedge funds Saba and Cox have offered tender offers to locked up holders at a steep discount. Also worth noting, guys, that both funds saw gross inflows, which combined with the 5% gates meant that net outflows were somewhat modest, and this is actually what matters for the firm's revenue. The stock, though, for the parent company, OWL is the ticker, that's down more than 6% this morning, down by 42% this year, guys.
Those are some big redemption requests.
Certainly are. All right, Leslie, thanks. We're gonna do that ourselves. We said no. Let's Leslie.
Leslie, one question on that: the firms that are offering to buy out the investors at the two Blue Owl funds that aren't going to be able to redeem, is that a common practice, or does that tell you if you've got the patience and the money, maybe they see long-term value in holding on to those positions?
You're exactly right, Becky. So Saba and Cox, I talked to Boaz Weinstein a couple of weeks ago about this very dynamic. They see a lot of opportunity here. They're offering basically a 30% discount to tender investors who are facing this illiquidity pinch. And they actually like Owl for the long run. They're long a little bit of the equity, at least they were a couple weeks ago when I talked to them. And they kind of see this more as a byproduct of essentially a gap between what's going on in sentiment, performance, and an opportunity for them to offer liquidity for investors who may not want to see it through, until they can ultimately get whatever money back that they'd like to.
So if you're a retail investor, you get fleeced coming and going on that because you thought this was a liquid asset that is liquid, not liquid a lot of the times when you may want it or need it.
Exactly. It's definitely a learning lesson. I mean, it's in the fund documents. Every fund document has that 5% cap. It's something I think when these funds were structured, I don't know how many managers anticipated just the level and the scale of the emotion that we're currently seeing with regard to the redemption requests and the difficult decision making involved in whether to restrict redemption requests, restrict them a lot, or to take steps, as we saw with Blackstone, where they were able to raise it to 7% and then put in the firm's own capital and employee capital in order to fulfill all of the requests.
The question is if you just were able to leave it there, if you could ride this out and there is value, and it sounds like certainly some of the professionals believe that's the case. Leslie, thank you.
Yeah, and that's what they say in the Blue Owl letter, too. They basically say, we see a lot of opportunity in the market. We've seen this in a few of these letters, basically, because spreads are widening as a result of all of this turmoil and concern. And so if you are a private credit manager, that could be a good opportunity if you have the liquidity to put into place. And so if you are to fulfill all the redemption requests, you may not have the same liquidity profile to be opportunistic if you do see various potential in the market environment. And so that's another part of the rub as well.
Yeah, you can't do it if 40% of your funds are gone. You can't be opportunistic.
Exactly. Yeah, you definitely cannot.
You're not just moving, you're moving in the right direction.
How am I going to play soccer?
Chop here a little bit and then decide.
Eva Otto's COO and Chief Investment Strategist of ER Shares, also an early investor in SpaceX through her fund. Eva, good to have you on.
Thank you for having me.
How did we oversell that? How big of a deal is this IPO?
It is one of the biggest deals going. It's going to be the biggest IPO, as you said. The next closest, and certainly in the U.S. history, the next closest one will be Saudi Aramco. We think if there's one company, private or public, in the entire investable universe that we would own, that would be SpaceX. And that's why, as you said, it's our biggest weight in our XOVR ETF. We have very strong conviction in this company.
Maybe given it's SpaceX, it's bigger than this, just this investable universe. Maybe it's all the universes. Okay, it's very, listen, it's, right. Thank you for laughing at that. It's very cool. Rockets are awesome. Mm-hmm. But what do they do that deserves that kind of valuation?
Yes, it is the moat. It's one of the very few companies globally that actually has a moat. And it has a moat, a very well-diversified moat across many industries, space, AI, telecom. Think about it. When Amazon is launching Amazon Leo, and in order for them to meet the FCC deadline, they need to use SpaceX. When you make your biggest competitor your biggest customer, that is a real moat. We were the first ETF to democratize private equity. We included private companies in it, and we decided to invest in SpaceX and not OpenAI or Anthropic because in these companies, AI models can be easily replicated. There's not a real moat. The moat is infrastructure. So now with XAI and SpaceX together, you actually have a moat.
Yeah, we're looking at Anthropic and OpenAI, and who knows where this will all go, but I think your point is well taken. And that rocket scientists, actual rocket scientists, are harder to find than software programmers. Yes. And is that sort of the idea around this, which is that what SpaceX does, and maybe Blue Origin, Jeff Bezos and Leo, his company, Amazon, that is just takes decades to get good at.
Correct.
If you ever get good at it.
Correct. And we think Elon has put together the best team. That's why they have reusable rockets. They are the most cost-efficient and reliable rocket operator. We believe Elon is the greatest entrepreneur of all time. We think it's a combination of Carnegie and Rockefeller together.
He's going to be a trillionaire, I think, after this. He might be. I'm not joking. He's going to get close because this is going to be, if those numbers are accurate, this will be bigger than Tesla. Do you worry there's too much Elon Musk risk in this, that he's too relevant to all these companies? No. Sort of that key person risk?
I think it's actually to the benefit because now he owns the whole supply chain. Just sort of like Rockefeller, he owns everything linked together. So his competitors are going to be using him in order to put rockets up in the space. So once you get to that point, then you kind of have a monopoly. That's why we think the valuation is justified because this is not just a tech play, it's an infrastructure play. It has monopolistic characteristics.
You guys do a lot more than just SpaceX. So how much, if at all, does this IPO, SpaceX IPO, does it matter for the overall market?
Yes.
Because if it goes well, I do wonder if there's like an element of investors who've been kind of flittering around the edges that might think, oh, this is cool. maybe it's time to get in. I don't know.
We see, and that's the reason we democratized access and provide access to retail investors that are being locked out of these opportunities. This is the biggest, we believe,
what are these
cycles of the last decade.
Wow.
And this is a unique IPO for three main reasons. First of all, it's the biggest IPO.
Yeah.
Secondly, there's going to be 50 to 75, as you said, billion of fundraising on day one. This is a historic number. And third, if there is an S&P 500 fast-track inclusion, that's going to have a buying pressure that's going to mitigate the selling pressure that we see after the 6-month lockup. So and by the way, that's also going to have buying pressure before the lockup.
Buying pressure, not selling pressure, buying pressure.
Buying pressure, because you have 7 to 10 trillion in mutual funds and ETFs of passive money following the S&P 500 index, and you also have 8 to 11 trillion of corporate mandates following the index. So if that money comes in, and if SpaceX has now a 2% weight in the S&P 500 index because it's going to be similar valuation of Tesla now, then that 15 to 20 trillion equates to 300 to 400 billion of buying pressure once the company goes public.
It's pretty cooked.
SpaceX now confidentially filing to go public in what would be one of the biggest IPOs ever, reportedly expected to allocate as much as 30% of shares for retail. Our Deirdre Bosa has more on that in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So Elon Musk, he's selling loyalty disguised as access here, and Wall Street is helping him do it. The norm is 5 to 10% retail allocation in an IPO, but Musk wants his following in the stock, not just because they will buy, but because they'll stay and they'll likely vote the way he wants. Now, he saw this at Tesla, where retail owns about 30%. When a Delaware court struck down his $56 billion pay package and called it unfair, retail shareholders, they voted to reinstate it anyway. And then last year, they approved a new one worth up to $1 trillion. That was the largest in corporate history, even over the objections of every major proxy advisors and some institutions. Now, Musk wants to build that same structure into SpaceX from the jump, except this time it's a company with no track record. As one source tells me, if he actually needs 30% from retail, that tells you something about the price. Now, the only real precedent is Saudi Aramco, which also gave retail about a third of shares in its listing back in 2019. Now, that was widely understood as a loyalty play, nationalistic play, not a market clearing price. And the stock, it went sideways for years if you look at that across its history. Retail access, it is a good thing when the price is right, of course. But if SpaceX proves you can hold a $1.7 trillion valuation by loading up on retail, it could also set a precedent for the other blockbuster IPOs this year. No doubt OpenAI and Anthropic are watching this, and it could become the playbook for how the entire AI sector, pure play AI sector, enters public markets, guys.
Dee, how does this all play in with XAI as well in that combination from February?
Well, that's the interesting comparison, right? Yes, Tesla has a retail base that it built over time. Musk is essentially asking retail investors to get in from the get-go just a few months after they folded in XAI and a social media platform into essentially a rocket company. So he's asking them to maybe believe from the beginning and let him prove it, which I know you guys were talking about this earlier. Certainly he has proof before, but his timelines aren't always what he says they are. So it's an interesting bottom-up approach versus what we've seen in the markets. This growing trend over the last, few years is that companies that are already public build this loyal retail base. He's essentially trying to engineer that from the beginning, and it is very different because, as you rightly say, Carl, you're folding in XAI, which is losing a lot of money, and a social media platform.
More boxes, more options. Grainger has over 1,700 box types.
Man, I want to make a phone call. I always wanted to make a phone call. Yo, what's the market doing? It's not running up, nor is it rejecting. It's here. This time. Huh. This shit is scary. It's bearish trying, but it's scary. But anyway. I'm gonna make a phone. There's right here. What in the fuck cycle is this today, though? I don't know. Oh god, my head's. Yeah, what is this fucking weird ass box up here? 12:10. The bulls are back. Time is 12:10. This is a very messed up day. Guess not a messed up day. Messed up. Cycling at the bottom of the purple box. But they tested the top of the purple box like 1, 2, 3, 4, 5, 6 times. Destroying the bears mostly. 0 DTs up top. Yo, so maybe my house is cold. I gotta go turn the heater on. I feel very cold right now.
Taxes was chasing updates and getting nowhere.
Our next guest suggests we are in the midst of a premature market rally. Michael Contopoulos is head of multi-asset macro investing at Janus Henderson Investors.
All right.
Michael, welcome.
Thank you.
Congratulations.
Come on. All right. I mean,
the deal is official today. It was
congratulations.
by Janus Henderson. So congratulations. Nice new title, too.
Thank you.
Why is this rally premature?
Well, I think, listen, there's a ton of uncertainty still out there, most importantly around inflation with oil prices being higher. I think what we saw is in April of last year, you really had a bottoming of core PCE. And, you know, since then, inflation's been trending higher. The economy was quite strong going into this war. You saw ISM prices paid today was through the roof. And oil prices are certainly not helping. And so I think inflation is going to be elevated for some time. Investors aren't giving that enough due. Rates probably need to go higher, and that should suck out some liquidity from the market.
Walk us through why you think inflation will stick, because I feel like that is the out of consensus view, and that most people think that this is a shock, and that when the war's over, things will go back to normal, and inflation levels will return to what they were prior. So why do you have that view?
Well, I do think that's a possibility, but even if oil went back down into the 60s or 70s, you're still going to be well above 2% on inflation. And you were going into the war. And I think people forget that. You know, we didn't think the Fed was going to cut going into March. We think if things go back to the way they were, they're still not going to cut. The economy is quite strong. Earnings growth is pretty strong.
I don't have the confidence.
Inflation doesn't seem to be trending towards 2%. Certainly not the inflation the Fed cares about. And so there's a chance that oil does go back down. And you see a headline come down a little bit from the 4% estimates or whatever some of the economists out there are saying today. But it's hard to envision where you get to 2% without a real growth shock.
So if, let's say, Warsh becomes the new chair and there's some resolution with what's happening in the Middle East, do you think it would only be labor that would get the Fed to cut, or would Warsh cut no matter what?
Well, I think there's what should happen and what will happen. I think if Warsh cuts and labor doesn't weaken materially, that's going to be a mistake. And I think the markets are going to punish the Fed pretty meaningfully in that case, and the bond vigilantes are going to come out, and you're going to see much higher rates. You saw that last year, 2 years ago in 2024 when the Fed cut 50, rates went higher. You saw it really since they've cut this go around, rates have gone generally higher. And I think if they were to do it again, given
bearish
current
on the
growth levels
5 minute.
And inflation, rates are going
SPY
higher. So I do think labor is most likely going to be the fulcrum that determines whether or not the Fed cuts. But obviously, if there's if there's some intervention from the administration, then you could have a mistake.
What do much higher rates look like? 4.5, 4 and 3? Is it 5% in the 10-year?
Yeah, I think it depends on really two things. One, if the Fed cuts in the context of 3.5%, 4% inflation, I think you can go well north of 5%. If you kind of go back to where we were pre-war, and you're just hovering around 3.2%, something in that neighborhood, 4.5, 4 3/4, I think that's probably where you could settle out. So it's higher from here, I think, on the rate side. It's just a matter of to what degree.
If you're looking for business funding, stop wasting time with traditional banks. Get matched with lenders who
yeah. Slightly bearish triangle with no volume.
Welcome back. Speaker of the House Mike Johnson and Senate Majority Leader John Thune working on a new two-track plan to end the record-long partial shutdown at the Department of Homeland Security. It would affect all of DHS except parts of ICE and Customs and Border Protection. The funding would be handled through reconciliation later, bypassing the Senate filibuster. The president endorsing the plan, writing on Truth Social, I am asking that the bill be on my desk no later than June 1st. So we know now that reconciliation is happening. Joining me now is California Congressman Darrell Issa. Congressman, good to see you. Thank you so much for being here. Welcome back. Do you think that's doable? Can you all get a reconciliation plan on the president's desk by June 1?
You know, there's never been any doubt that we could do reconciliation. But after the big, beautiful bill, one of the real questions was, what would we put in it? What would be the priorities? We now have an urgent priority that we can cobble together. The offsetting, I repeat, the offsetting dollars that go with anything we fund in reconciliation, because as you know, it has to be neutral.
Right. It has to be neutral, and there are certain things that I know that the president would like in there that don't right away or ordinarily look to be budgetary, but people, your colleagues, have made an argument that they could be. Like, for example, the SAVE Act. If you have to allocate money to the states to secure elections, would that become a budgetary item?
Like this.
Absolutely. You know, we have a policy of honest and free elections, ones that don't have fraud. Now, that's an existing policy. We're not creating
I need
policy.
a drink.
We have 36 states that already have voter ID. We have the Real ID Act, which requires, as you know, every time you fly, you to have a certified piece of identification to get on an airplane. So all of the policies are there, but we would have to find the dollars. And obviously, ICE deals with immigration and customs, so we would likely look to offsets in that area. And as you know, the president's desire to bring in good people while getting rid of bad people could create a, not a policy change, but an improvement in the way we actually do things over the last administration that brought in 10 million people plus haphazardly. Well, actually deprioritizing the best and the brightest, the graduates with STEMs, all the other people that we need for this absolutely rocketing economy that we expect to lead.
Yeah, it's a great point that you make. And, you know, it brings up birthright citizenship as well, because I don't know that people truly understand what's going on with birthright citizenship. And, you know, Peter Schweitzer made a really important point to me recently about this, that the Chinese are really exploiting this. They come here, they have babies, and they get the passport, they go back to China, and that child is raised in China. And then when they're ready, they can come back here, vote, they can do whatever they want, they can work in the military. I mean, after all, they're American citizens. Do you think people fully understand how birthright citizenship is being exploited?
No, most people don't understand that even our founding fathers, they found certain things. They said an invading army wouldn't enjoy birthright. Clearly, at the time of the debate, they excluded diplomats. So they understood that foreigners, people whose allegiance is to the foreign power, people who didn't come here legally, were all to be excluded. We just simply haven't done it statutorily. And what we're really doing is doing in statute what was clearly debated at the time of the amendments that created the perception that birthright was for everyone, when in fact that wasn't what the authors said at the time they were marking it up.
Yeah. Meanwhile, here's Peter Schweitzer with me recently on this very issue. Watch this.
China has a very sophisticated program of exploiting birthright citizenship, and the Supreme Court's going to be hearing this case. Our federal government has no idea how many children are being...
Let's do our first poll of the day, folks. In your opinion, the volume will come. In your opinion, the volume will not come. Right here. It's weird because they're kind of going down oversold already. So even if the volume comes, it could trap bears. But is the volume coming downside, I guess? Six people voted coming. One person voted not coming. I almost want to vote not coming, but I will vote come. Because of the way the MACD is fucking set up, there's like 10 people voting coming. One person voted not coming. Crazy. The volume is not coming right now. The candle on the MACD RSI came. Unless the volume comes. Like it did at 10:35. Yeah, 10:45. And at 9:50. Bear trap trying. 1220 low holding. Dive is 1225. My shoulder, chest hurts. Bruh. What even is this on the video too? Oh my lordy, man.
Minted as U.S. citizens using this technique, but China has looked into it. China has encouraged this. They've pushed it. The Chinese government believes that every year for the past 13 years, Maria, roughly 100,000 Chinese babies have been born in the United States that are then taken back to China, raised in China. When they turn 18, they're going to be U.S. citizens. They can vote in elections, donate to political campaigns, get government jobs. That's more than 1 million voters. Remember that 2016 election was settled by 80,000 votes. So it's a massive exploitation of our immigration laws. Other entities like the Muslim Brotherhood and the Mexican government are doing the same sort of thing.
I don't like.
Meanwhile, Congressman President Trump, of course, addressing the nation last night. He did not raise this, but he gave us an update on Operation Epic Fury. Let's take a watch.
Discover the perfect balance at LifeBridge Academy. Fun and learning for your child. Peace of mind for you.
I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. We are in this military operation so powerful, so brilliant against one of the most powerful countries for 32 days. And the country has been eviscerated and essentially is really no longer a threat. They were the bully of the Middle East, but they're the bully no longer. This is a true investment in your children and your grandchildren's future.
Your reaction, Congressman?
Well, last night, 2 things happened. You heard from the first president since Richard Nixon who set about ending wars and did not want to have protracted wars, but would use large amounts of force to bring them to a close. And by the way, we launched a mission to the moon, the first one since Richard Nixon in 1972. So I do believe that President Trump is showing the kind of leadership that we've been without for a long time. And obviously his discussion about the Europeans stepping up because they're the ones that use it. Well, in fact, if we were to decide, we could pick almost any price for our oil if we simply said it wasn't going to be exported, because we're not short of oil in the U.S., and the president's well aware of that. What we are short of is the support for this war from the Europeans and the Asian countries who depend on that oil. We don't.
And, you know, you're right. And I thought that was so compelling that he made that point, that the U.S. is producing more oil than Saudi and Russia combined. Iran's foreign ministry spokesperson is fighting back. We just showed the quote. Iran claims that we will not tolerate this vicious cycle of war, negotiations, ceasefire, and then repeating the same pattern as an unjust war that has been imposed on the Iranian people. And no mention, of course, of the fact that they've been saying death to America and death to Israel for 47 years. But the other leadership that President Trump has shown throughout this agenda is ensuring that America is first in so many issues, including getting back to the moon. And I want to get your take on the Artemis launch yesterday. It was just remarkable with the crew of the Artemis 2 now on their way after yesterday's launch. It marks America's first moon mission in over 50 years. The crew begins their 10-day mission to test systems in deep space, potentially paving the way for future moon landings. In fact, Jared Isaacman, the head of NASA, told me that the plan is for an Artemis 3 and then an Artemis 4 in 2028, where we will have our astronauts walking the moon again before China. You're a member of the House Science, Space, and Technology Committee. Give us your sense.
Well, I was there when Jared made that speech last night here in Florida at the Cape, and he laid out the president's vision for a 1-2-3 punch, where we will be in a new, improved, completely different rover environment. But the most important thing that was said by him, that the vision of this administration is, in fact, we're not going to the moon to see it and leave as we did 54 years ago.
Bullish.
We're going there to go, to stay, and to use it as a base for that leapfrog to Mars, for that ability to do things that we envisioned in the days of slide rules, but we're doing now in the days of quantum computing.
Yeah, and you know, there's so many ideas for moon business and activity. Do you believe the U.S. can beat China there?
We will beat China there. You know, we have space.
What a literal way to cook up cycles today. All those fucking bears from 12 to 12:20, the 33rd now getting stuck. It went down so fucking slow with no volume. What is crossing lines? Yesterday's range on the video. What is stepping lines? I wish I could just reach out. Oh, what is this candle? Rejecting again, but won't go nowhere. It won't even run either, like. Oh my god. Ain't no way.
If you're a man who makes at least $150K.
From the United States of America, we have plenty. We have so much. And number two, build up some delayed courage. Should have done it with us, as we asked. Go to the strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the strait will open up because of our drill baby drill program. America has plenty of gas. We have so much gas. Under my leadership, we are #1 producer of oil and gas on the planet, without even discussing the millions of barrels that we're getting from Venezuela. Because of the Trump administration's policies, we produce more oil and gas than Saudi Arabia and Russia combined. Think of that, Saudi Arabia and Russia combined. And that number will soon be substantially higher than that.
And that's President Trump last night addressing the nation on Operation Epic Fury, urging allies to buy U.S. energy and even take action to secure their own supplies in the Strait of Hormuz. Oil prices are higher this morning. Brent crude up about 8%, and crude oil is up more than 10% right now, 10.75% higher on crude oil at 110.81. Joining me now is Continental Resources founder and chairman Harold Hamm. Harold, good to see you. Thank you so much for joining us this morning. And I want to get your take on the president's address last night, in particular, what he just said about the U.S.'s capacity and the fact that the U.S. is producing more oil and gas than Saudi Arabia and Russia combined. That right there tells you that American energy is, in fact, the backbone of energy security. Your reaction?
Yes, I did hear it, and certainly the president is correct. America is certainly the most secure oil market in the world. I've heard recently that there were some countries that were dependent as much as 92 or 3% on oil coming through the Strait of Hormuz. I mean, obviously, that's not a good business plan and hadn't been, for a long time. Huge risk. Every one of us have known that for a very long time, and now it's come home to roost for sure. But I heard the president, and it was good for him to remind Americans where we are. It all started with horizontal drilling. The last 30 years, last 3 decades, it was pioneered right here in Oklahoma City and brought it to the world. We now have the cheapest oil. We've lowered energy costs for every single person on the planet. So that's what we have. Taken the world from an era of scarcity to an era of abundance. Yet here we are with this logistic problem, if you will, at the Strait of Hormuz. So anyway, that's where we're at today.
Well, let's talk about that, because this tanker traffic situation continues pretty much at a standstill in that key oil waterway, the Strait, keeping supply fears front and center for global energy markets. Harold, what are the answers here? I mean, there is another pipeline in Saudi Arabia in the Red Sea. Can that pick up some of this? What can the U.S. do to pick up some of this? How do you get the market to understand that the Strait of Hormuz and the Iranians should not be dominating and holding hostage the global economy by shutting down this waterway?
Maria, here's just one more act of aggression that Iran is putting on the world. And so it shouldn't surprise anybody. This has been the home of terrorist activity, terrorism for 47 years. They've killed hundreds of thousands of Americans. What more should we expect of these guys? So, yeah, it's certainly a bad situation there, but this is international waters. They have no legal claim to this at all. They're trying to take advantage of a situation that's just geographical. We can't allow them to do it. We can't allow them to be in control of the Strait of Hormuz now or in the future. So we have to take action, and certainly shouldn't do it alone. The president's right. I mean, this is for NATO. My goodness, Europe's the one hurting for oil. When you look around the world, just yesterday, physical barrel of diesel, physical barrel was $100 premium over the paper cost. So we're talking $200 a barrel for diesel yesterday in Singapore. So that's what's going on. $100 oil is not going to wreck our economy. We're energy independent here in America. We certainly are. And thank goodness, you know, for the energy and renaissance that we've created. But $200 oil can certainly be a shock to the world economy. So that's what we had to protect against. But not only now, we take control, and we've already got people coming in. I heard recently the UAE and the Saudis were going to help, and certainly UK and everybody in Europe needs to help, NATO, and get back in control of the strait and remain in control of it from now on.
So what you're saying is the president needs to finish the job and accept the help of some of the other Middle Eastern nations. I mean, this has turned into something of a regional war as the Iranians lash out at Saudi and the UAE. It's surprising and certainly disappointing that you don't see the Europeans front and center the way you have officials from the UAE and Saudis appearing to be ready to help.
Well, that's correct. And the president has said this a long time. I mean, NATO, we can't carry NATO forever. And he's exactly correct about that. So they have to step up and do their part, and they need to hear for sure. And basically, they're going to be forced to. And so that's where that's at. But yeah, it's a situation. I think oil will come back down. Oil prices will moderate again, and we should expect that. But let's talk a little bit about the pundits. We'll call them the economists.
Who thinks
some of which have been on this show,
like, genuinely,
and talk $40 oil, $40 to $50 oil. You know, that price. That is not a sustainable world price of oil. It's just not. You know, the average cost of supply is much higher than that. I heard Bob Donald mention $72. You're going to have to get back in that range and stay in it if we're going to have a oil supply that's going to meet the world's needs. And it's vital. It's vital. We're using 108 million barrels a day, every day in the world. And, you know, it takes a lot of investment to make that happen. So anyway, we've done our part here in America. And the president mentioned LNG, natural gas. My gosh, we do have a lot of it. And you know, when you look at what's happened just the last 10 years, being able to supply our allies and much of the world with LNG, that's terrific. And we got a great deal of supply here to do that with.
It sounds like you don't expect oil in the $40 a barrel range anytime soon, certainly not in 2026, Harold.
No, it's not going to happen. You know, you shouldn't expect that. You shouldn't expect it.
Right.
And I think we're doing a disservice when we talk about it. You know, talk about $40 oil, $50 oil.
Sure.
It's below the average cost of supply, and it just doesn't work. You know, that's not the way economics work. You have to get paid back for your investment. So that's what it is. And talk a little bit about China and Asia, and I mentioned Singapore and how they're hurting there for supplies in Asia.
Sure.
And you know, the Chinese aren't worried about this. You know, when oil was cheap, you know, $60 oil, they were buying, building a supply right now, 1.2 billion barrels, going to 2 billion barrels.
Wow.
You know, we encouraged refilling our SPR when it was cheap, and we kind of missed an opportunity there, but the president was for it. You know, Congress has to work and make that happen. But after Biden drained it for political reasons, We need it refilled, and
that's right,
for America's interest.
Harold, it's great to get your insights as always. We so appreciate your time this morning, sir. Thank you.
Thank you, Maria. It's always good to be on your show.
Harold Hamm joining us from Continental Resources. We'll be right back with a look at nuclear.
Your job.
Let's say. I mean, in the bigger picture, it's like a very oversold bounce. But just the way they fucking exchanged hands from yesterday to today with this Trump news. Pain has been felt. Motherfucking pain. I literally, I almost even want to re-enter these fucking puts, but like I'm just holding on to them right now. Like this is kind of fucking toasted. Like they go a little bit higher into today or the weekend. Like this does so fucking much with data. You know. It's not a lot of interest with no volume here. On the downward horizontal sloping. Wanna. Back to the bottom of the purple box. What even is this fucking goddamn market? Like, perfect fucking shop. All day long. I don't even. Man, I don't. First of all, fuck this market. I'm busy with some shit else. Like, how the fuck is time already 1? Like, it was literally 11 a.m. 5 fucking minutes ago. Like, why can't we go to the mountains to go ski? And if we're actually happy, be happy. Are things so complicated? When is earnings season? Someone said it's almost earnings season again. When is earnings season? Mother. There's truly no direction.
Morning. Well, welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Nathan Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. Nate, what a week. Obviously, we've snapped this rally. We couldn't hold 6,600 yesterday. We fell through 6,500 this morning, although bounced off the lows now. But what is your technical sort of charts and analysis telling you right now?
Yeah, good morning, Sam. So we know that we're below the 200-day simple moving average on the S&P, Dow, and the NASDAQ as well. The two holdouts have been the Russell 2000 and the S&P equal weight. And they are above, I believe, or right around their 200-day simple moving average. But, Sam, I think you have to go to Monday's low. That's kind of the line in the sand. And then if you want to get very nuanced, I'm a trader, and just to the audience out there, the demographic that I serve is our options traders, our more active traders. So I'm not in money management. I'm more of like a options educator, and I put out content that's market timely. When I look at the nuanced price action here, it's basically been, I think the correlation with, the S&P 500 and oil is like minus 0.82. So it's almost a perfect, or close to a very high correlation, inverse correlation. And then you look at the price action today. Well, WTI, it's up 10%. It looks like we might get to, another closing high. We hit 120 a couple weeks ago. But the price action is relatively benign, meaning we're off the lows. We're not making new lows throughout this session. We're actually near the highs of the session right now with WTI around 110, which I think is something to pay attention to. And then the other consideration I look at is where did the money go when we had this 2-day sharp bounce over the this week? And they went to basically gold was a relative outperformer. They went back to treasuries and then also the AI infrastructure plays and mega cap tech. That's where the money flow appears to be going, looking for relative safety.
Yeah, and it's interesting because I was even talking to Katie Stockton yesterday with obviously her technical analysis. It looked like we were seeing a bit of short covering in recent days, and in fact a bit of a chase rather than positioning in this market, which tells you something as well about just how much stock we were putting in that rally. But obviously, again, we could call this Friday, couldn't we? Because we're going into a long weekend when the markets are going to be shut, de-risking once again going into the weekend. Then if you are tracking some of this options activity, then Nate, what is it telling you about, what we could be in for as far as vol heading into Easter?
Right. So on the option side of the equation, a lot of the hedging has really already been done. And that's institutions primarily go to the SPX, the S&P 500 index, and that's where they're looking to establish their hedges. They'll go to the VIX as well. VIX options volume this week, and even leading up to that, it's been coming down. It was like 3x, 4x that I was seeing maybe a couple weeks ago. So that just tells me that a lot of the hedging has been put in place. Look at the VIX today. It's only around 26.5, 27. But what happens when you get into these elevated type of environments is that if you're an options trader, you're going to need to basically sell some vol. So what does that mean? If you want to buy a protective put, sell a call. You could also buy a protective put and then sell a lower strike put to do that as well. You could also do a put front spread. I'm going to buy a put, sell 2 lower strike puts. But that's kind of the environment. But Sam, it's not like when you get these types of elevated VIX environments that option volume goes up, heavily, and it's because options are so expensive. And so you really have to be a nimble trader. You have to be experienced. You have headline risk. And to your point about heading into this weekend, not only do we have the non-farm, monthly jobs report that's coming out, but President Trump had said April 6th was the deadline that he was going to extend. Is he going to attack the energy infrastructure? And if so, what is going to be the response from the Iranians, basically, if that does occur? So there's a lot of, heightened uncertainty, I would say, heading into this 3-day weekend. And yet we're basically at the highs of the session. So I'd say the price action today, at least, is relatively benign.
Okay, good to know. Yeah, you're right about April 6th. There's just been so many headlines since then. It's really hard to keep track right now. And herein lies some of the confusion and just how sensitive the market is. Anything else stand out to you? I mean, obviously we've got chips on the back foot today as well. I mean, technology is getting hit pretty hard, it seems, the softwares as well. I mean, after catching a bit of a bid, I know that things had been getting a little bit sort of technically ugly, you could say, for some of the Mag 7 cohort as well earlier this week. Anything that sort of stands out to you here on the charts?
Well,
I miss her!
It's not just on my mind. Have we really hit that level of, capitulation? And what is capitulation? Well, capitulation typically is characterized by a big spike in the VIX. You usually get some kind of a V rebound. You might get some kind of price action where there's really bad news, we gap down, but yet then we close at the highs of the session. So you're looking for some, anomalies, basically a really sharp sell-off, really extremes, sell everything, correlation to 1, get me out of here. I don't want anything to do with it. I've given up, so to speak. And then has that moment been reached? Because right now, even though we rallied over the past couple of days, we're still in a downtrend, and you're just making lower highs, lower lows, lower highs, lower lows. Yeah. We're still in that downtrend, and so what you want to do is establish that confidence within the market psychology, and so we need something to trade against. And if you're in a downtrend, it's difficult to get money flow back into the market. But if you have something of a V to basically put a line in the sand, then that would be more encouraging. So that's still a question mark out to the markets. Have we hit that capitulation point?
Big question. Speaking of encouraging, in fact, Europe is off the lows in this final hour of trade out in that part of the world. The FTSE in London just turned green. So a bit of good news to end the week on. Let's see how long it lasts. Nate, really appreciate it. Have a great long weekend. Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Natural Research. We're back on Morning Trade Live. Crude oil is higher this morning, although coming off those highs after President Trump addressed the nation on the Iran war last night. Here is where some of the biggest oil and gas names are trading during this morning's session. We've got ExxonMobil just down fractionally right now, but Chevron, ConocoPhillips, BP all higher in the vicinity of roughly 1.5% right now. But as I mentioned, we do have oil coming off the highs following Iran's comments just in recent minutes. So let's go inside out on the energy sector. Joining us now is Craig Holter, Director of Research, Carnegie Investment Council. Craig, I don't know if you've got any comments on what we've just heard from the Iranians, particularly with respect to obviously trying to resolve, obviously what we're seeing in the Strait of Hormuz with this traffic and drafting a protocol with Oman, because it seemed to move the markets quite dramatically in the last 15 minutes. I just wonder if you have a response to that.
Thank you for having me. First of all, I guess the major response here is that, like the oil markets, things are very fluid currently. And I expect that to continue until we get some sort of resolution, and the markets are very jumpy. We've seen that immediately here, bouncing up and down and all around, apparently.
Yeah, thanks for, obviously giving us a quick reaction, and sorry to have put you on the spot there, but, obviously this has been really the driver of why we've seen these energy prices soaring, and obviously a lot of these stocks, benefiting off the back of that. So just walk us through how you would characterize the energy sector right now, given, of course, it just seems like they've got a lot of tailwinds, because even initially before this war, it was all about, the AI data centers and the onshoring efforts as well.
Yes, that's true. Certainly, there's a lot of energy in the U.S. for sure that is needed, lots more power. But, oil was 55 for WTI back then, and kind of in a trend and maybe even a downward trend. So to have prices double, that's certainly a difference here. The data center story was not really driving the price of oil, or for that matter, natural gas, which is under $3. So from that standpoint, this is a sea change And I kind of go back to 2020 when you had negative oil. Maybe it was only for days or whatever, and was it even real? Who knows? But did it stay negative? No, it didn't. And do we expect oil to stay at 110 to 120? So these companies are minting money right now because their costs really aren't changing. So it depends how long and actually what price they are selling the products, because you do have a whole futures market out there, and you can't just change the prices that dramatically to see that impact. But if we do have this staying longer here, these margins for these companies are going to boom.
Yeah. Yeah, I mean, that's the expectation, and that's why, obviously you'd probably be kicking yourself if you were on the wrong side of this trade. And so let's just talk about the portfolio, because obviously this is seen as a good hedge with respect to what is going on here with these situations. But is there any part of the market that you feel is a little bit overdone at the moment? And when would be the time to maybe take some profit, obviously switch things around, reallocate a little bit more?
Sure, certainly on the energy side. I mean, the oil side, if you look at Exxon, it's gone from $110 a share up to $170 in the last 5 months or so. That's quite a big move. It's trading at 19 times earnings, forecast earnings. NVIDIA's at 19 times earnings. Margins are slightly different, probably 80% for NVIDIA and 15% for Exxon. So, those levels are basically saying that they're going to grow at the same rate based on that PE into the future, which I don't think is likely. So we'd be lightening up on some of these energy positions, certainly not getting rid of them. They're worth having because of these situations that happen. But you've had huge moves in a short period of time here, and, nothing goes to the sky.
Right, and I see you do like Kinder Morgan, which is obviously benefiting from data center build out as well. So that's an interesting name that's been on your radar. But Greg, we have to leave it there. Short and sweet today. Greg Holter, their Director of Research at Carnegie Investment Council. Appreciate your time. Let's trade Chevron now with George Siller. So walk us through an example trade on this name, George.
Well, yeah, I mean, if you look at Chevron, Sam, I mean, this is clearly a vertically integrated powerhouse when it comes down to, upstream to downstream gasoline as well as petrochemicals. The stock has done extremely well this year. But if you look at the pullback the stock has had over the last few days, it's sitting around the 50% of that pullback, about a $20 balance range. Crude oil is very fluid right now, so we have to be mindful of that. We talk about, this may perhaps 2-week escalation of the war, and we could certainly see crude oil, which again, traded the downside just over the last 10 minutes is rebounding. So a lot of volatility. So I'm going to structure a 2-week trade in this case for Chevron. It's bullish, but we're going to take into consideration to dampen volatility risk as well as theta decay or time decay because we have a 3-day weekend. So I'm going to go out to April, and I'm going to structure a 200-210 call spread. So I'm going to buy the $200 call and sell the 210 call against Chevron. And altogether, you could have bought this for about $4 a share or $40 a contract. So the premise behind the trade is that there's a bullish continuation of Chevron. It seems to have been reclaiming the 20-day moving average over the past few days with a nice bounce today. But this is under the assumption that crude oil stays higher and perhaps even continues from here in the next couple of weeks, assuming, again, the Trump administration's escalation of the conflict continues. But again, it's very volatile, very fluid. But in order to be profitable, you have to hit at least 204 by expiration. And if it hits the max profit target of 210, you would earn $6 a share on this trade. But your risk is what you outlay. It's $4 a share. If it doesn't work out, you have to consider, maximizing your loss at $4 a share.
Yeah, I mean, who would have thought the headlines around Venezuela was only, like 3 months ago or something, obviously where we were starting to look at these names. But yeah, as you say, the long-term story remains intact here, particularly with what Greg was saying with respect to, obviously, the power-hungry energy sector, the data centers, I should say, here in the U.S. as well, which no doubt is acting as a tailwind for some of these companies. Sitting up 1.5% today. Thanks so much for the example trade, George.
Are you sure your tax expert is right for you? Switch to TurboTax Full Service. You'll be matched with a TurboTax expert and get real-time updates on their progress. And you get your best outcome guaranteed. Switch to TurboTax Full Service.
Nearly home. I just need more space. I feel like I'm suffocating.
Oh, no. Is this the episode with the breakup?
How will we find the one?
Okay, let's simmer down now. Y'all need Realtor.com, the app the pros trust most. With over 500,000 new listings every month, you could find the one today.
This could be it.
Better put a key ring on it.
You could say that again.
You better put a key ring on it. Make it real with Realtor.com.
Let's talk about vendor financing, because that has been something that has raised a lot of questions on Wall Street since you cut this deal with OpenAI. Yesterday, Bloomberg is reporting that you
This is the range we were playing with fucking yesterday. I mean, and the biggest key today is this oil shit.
Now joining us, our next guest, Ahmed Riesgo, Chief Investment Officer for Insignio. And Ahmed, thanks for taking the time. Happy Thursday to you. Big picture. We've obviously had a recent sell-off. We're in the midst of it as we speak here in equity markets. From your perspective, does this seem or feel more like headline-driven fear, or is there some sort of fundamental break going on underneath the surface?
Well, look, I think it depends how long this lasts, but what we're seeing is how nonlinear this de-escalation is going to be, right? We need to focus on what the actors on the ground are doing, not what they're saying. The reality is that there has been a small uptick, or there had been in the flows of oil. The market reacted positively to that. That's why you saw an inflection 2 days ago. The market was expecting a bit more clarity out of President Trump last night. They did not get it, so they're giving some of it back. But make no mistake, in my opinion, I think the the direction of travel has changed here. And I think we did reach an inflection point a few days ago. It's not going to be linear. It's not going to be pretty. It's not going to be all in one straight line. But we are headed, I think, towards a de-escalatory path here.
Okay, so combining that with a market condition that's looking increasingly oversold, I think many would say, based on some metrics, what would need to change in your mind, maybe it's geopolitically, to kind of trigger that more meaningful relief rally that so many are kind of clamoring for?
Yeah, I think we need to focus on one thing and one thing only, and that's the amount of tankers going through the Strait of Hormuz. That's the only thing that matters for markets. Remember, the kinetic war can continue for the next 3, 4, 5 years, and the market won't care as long as oil and other products continue to flow through Hormuz. We saw this in Russia, Ukraine, right? That war is still ongoing, but it ceased to be a market concern a few months after it began. I think we're going to see the same thing here. As long as oil continues to or starts flowing again, the market will be okay with that, despite what's going on between the two actors kinetically.
Okay, we do have a little bit of benefit of hindsight, I guess, now since we've seen today, or at least what the open looks like. But say we get a sharp bounce, maybe even sharper than we've gotten so far this week, particularly maybe in like the tech parts of the market that so many retail investors find themselves exposed to. Is that something that investors should believe in or trust? Or would you treat that cautiously given the market backdrop that we're in right now?
I think only if you have a lot of flexibility and you're very nimble, then you can try to trade that. But if you're like most investors who are not watching the market on a daily basis, I would not try to trade that. I would wait for more definitive signs of this incoming or let's say upcoming de-escalation that I'm speaking about.
Okay, so you mentioned, and I like the comparison to, unfortunately, what's going on with Russia and Ukraine, kind of conflicts aside, human impact aside, just financial markets. You look at what happened as we have now the benefit of, now 4 years basically of that conflict. There was a lot of the same initial impact as you talked about, especially with some of the sanctions that were placed on Russia and sort of the forcing of that supply to find intermediaries and work kind of, let's call it, I guess, black market in some ways to get that supply online. What I think we realize now, and maybe many knew, is that we have a very dynamic, resilient and adaptive economy globally. And so even if the strait is not opened, or even if there is some sort of meaningful, lasting infrastructure damage, Ahmed, is there also a chance that the economy just adapts and, I don't know if we want to say complacent, or just gets used to what's going on, even if we take sort of the worst case scenario within reason, we take that path?
Absolutely. So the U.S. economy is much less tethered to oil prices than it was, a few decades ago. But also, what you're saying is absolutely true. Even tactically, the economy has shown great adaptability, flexibility, not just the U.S. economy, globally, to find other sources of energy as well. Now, there will be an impact. I don't foresee global oil prices falling down to their pre-crisis level anytime soon. Unless we were to get a recession, at that point we would get demand destruction. But that doesn't mean that they can't come down from where they are here, because like you mentioned, the global economy is quite resilient. Supply chains are quite resilient. They're flexible, they're malleable. Saudi Arabia can continue diverting through their east-west pipeline. Russian crude can continue to be unsanctioned. You'll see more Venezuela oil come online over time. So I think the system is a lot more resilient than perhaps some of the worst expectations out there are.
I appreciate that. And so if we kind of combine all this at once, we're very much, whether we should be or not, we're very much in this headline reactive market still. We're getting whipsawed on what's perceived as an off-ramp versus escalation or a lack of one way or another. Given your perspective broadly and perhaps the opportunities that you do or don't see long term, how could investors, given that whipsaw tape that we're seeing right now, how should they think about positioning within it, but also managing risk within that?
Right. So I think we will continue with this short-term volatility here over the next couple of weeks. However, I think the direction of travel eventually is on the way up. So I think if you're an investor, if you buy, you buy assets that you find attractive right now, and there are plenty of them out there, and there's plenty of assets that have re-rated, that are trading at, discounts, very steep discounts to where they were even just recently. I think 6 to 12 months from now, you'll be very happy that you bought at these levels.
Okay, Ahmed, is there any area in particular that you find more interesting or less? I mean, I was talking with my last guest. He flagged it, for example, a company like Microsoft that's been repriced a lot. Some of the other Mag 7 names have been repriced. So not necessarily stock specific, but we've seen energy perform well recently. Like, is there a part of the market that's standing out right now in your mind?
Yeah, so software is one of those sectors. We've basically undone 10 years of outperformance versus the S&P 500. Now there's a lot going on there. It's not just the Iran crisis. There have also been concerns around AI and what the impact of that is going to be on the sector. But we actually see increasing demand for software companies, and we see them reporting rather well. So I think you've had a 10-year opportunity in that sector. We really like the space sector. We think between Artemis yesterday and the upcoming SpaceX IPO, you have a sector that's booming. We haven't even begun to trade that as investors. So there's lots of very attractive sectors out there that have been impacted by this crisis that are really not even, they really should not care about what's going on in Iran. So there are definitely opportunities out there. Investors have to find them.
Good stuff. Ahmad Riesgo, have a great rest of your day, great long weekend. We really appreciate you taking the time. Ahmad, of course, the Chief Investment Officer of Insignio.
I want to text. And just like that. Do they break out of this purple box downwards or up? Somehow neither. Pullback is trying. I don't know if it's going to be weak again. Pullback is trying again. Jesus Christ. I don't know if it's going to break the bottom of the purple box. I might be hoping that it does with the MACD and volume right now. Every single other time it hasn't. Let's see if the MACD and volume here grows. Or stops. Euro said USO gonna hit 150. We'll see about that. Dale said FUSO. We'll see about that. Bears are trying off of 125 into 140. Time is. But again, I don't know if it's going to break the bottom of the purple box. We'll see. They trapped the bulls after they trapped the bears. The candle and cycle almost looking so fucking perfect, like. It's crazy work. I'm debating adding 3K on the video. $176. My God. My God. What now? What now? Literally hunted off. Thursday close fucking horrendous. Holy shit. This shit is actually, I'm adding 3K on the video right now. Fuck it, this shit is actually horrendous. Horrendous. Wake up, spy. So I tell myself, wake up, Jeff. The fuck is wrong with you? Wake the fuck up. Cause just trying to be happy. 150. Go to VWeb. Again, MACD RSI going, barely any volume. If the volume really stacks here, the point is if the volume is there, candles will grow, and the range will break down. The volume is growing, folks. The volume is growing. The volume is growing. The volume is growing. The volume is growing. Alright. It's been about 10 minutes since the alert room. Small cycle pullback again, trying 135. Time is 148 right now. Volume is actually growing. Time is 150. This could be the 3/3 though. 3/3. Got no energy. I wish I could. $140. I wish you knew. I wish you knew. Wish you knew. I wish you knew. Wanna be. I wish I knew. I wish I knew. Wow. Can't even go more. What the fuck? Wow. NVIDIA is trying slow. It's crazy slow. It's actually watching paint dry. Don't know how it's possible today. Don't know why. But the fucking shit is actually watching paint dry. My life Joke. Sad as fuck. Slow as fuck. Two PM and 3 PM is coming. What the fuck is this? Ever since it came up to here, it's like playing 176, 177. Thirsty Wolves. 2 PM is coming up. Mac the RSI curling up from being oversold a little bit.
Pam Bondi is out as U.S. Attorney General, ending the tenure of a loyalist who upended the Justice Department's culture of independence from the White House. Bondi oversaw the firings of career employees and pursued the Republican president's perceived enemies. Her departure follows months of scrutiny over the Justice Department's handling of files related to Jeffrey Epstein's sex trafficking investigation.
I am deeply sorry for what any victim has been through, especially as a result of that monster.
The former Florida Attorney General came into office last year, pledging she would not play politics with the Justice Department. But Bondi quickly launched investigations of Trump foes that sparked outcry that the law enforcement agency was being wielded as a tool of revenge to advance the president's political and personal agenda.
Pam Bondi out. You're fired. Nothing makes me feel better. The fuck is wrong with me? With life. Time is 2 p.m. I mean, no move.
If during this period of time no deal is made, we have our eyes on key targets. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone, and there's not a thing they could do about it.
President Trump giving an update on Operation Epic Fury for the entire nation last night, threatening to strike Iran's power plants if no peace deal is reached, and bomb the country, quote, into the Stone Age, sending stocks lower, oil prices soaring. But those losses in check as we speak, as we head into the afternoon. Welcome back to the second hour of the Big Money Show. I'm Dagan McDowell, along with my marvelous co-host, and with us for this hour, Endeavor PAC founder Tiffany Smiley. Before we move on to what the president said about the conflict in Iran last night, he was making some news, as he always does, that has just broken. Pam Bondi fired by the president as the Attorney General. And the reports are that Todd Blanche, who has been his longtime counsel, is going to be replacing her as the Attorney General of the United States. As we dig into this, Jackie, you were reading about it as we were in the commercial break.
Yeah, I'm dying to know what happened. My understanding from the reporting from Fox News Digital is that it happened last night before the president's address to the nation, and that she was on her way back to Florida while the president was speaking. Obviously, when something like this happens, the president has come out many, many times praising Pam Bondi, and so I'm wondering what exactly it was that led him to this decision, that it was time for her not to be a part of the cabinet.
This is my take. She, from the get-go, royally fouled up the release of the Jeffrey Epstein documents, and it was just such a rolling disaster all year and was handled so poorly that was one of the biggest problems, despite her obvious loyalty and her background. But she met with President Trump, according to Fox News Digital, in the Oval Office on Wednesday night ahead of the speech to the nation on Iran, and she was reportedly informed of her ouster. She was with him though in front of the Supreme Court yesterday.
Oh yes, sorry, she was.
And then she got the you can go.
She was supposed to be deposed by a House committee later this month, wasn't she? Wasn't she subpoenaed by a House committee on the Epstein files? I think so. I don't know if maybe that doesn't happen now. Maybe it does if she's not in this role. The Epstein files are not my issue du jour, but my sense watching that throughout was there were these big promises. Tiffany, maybe this is something you watch more closely. Big promises of information, and then it always seemed like it was a thud, a dud.
Yeah.
Nothing happened. And people were like, wait a second, we thought we were going to get transparency. It feels like we're just getting obfuscation. Maybe I read that wrong, but that was my perception of it.
Yeah, and I mean, it's a tough job. Pam Bondi was in a very, very hard position, and you have to wonder what was actually going on behind the scenes. Yes, she is the leader. She's the face of it. But what was she being directed to do, and what information did she have access to? I will commend her. She's a patriot. She has been on the front lines for many, many years fighting for America and has extreme loyalty. So I thank her for her service and stepping into that role and doing the best that she could in the time and in the moment that it called for. And it's a tough job, and it's President Trump obviously feels like it is time to move on and bring in someone else for the administration.
I was just going to say, given so Todd Blanche, who is the Deputy Attorney General of the U.S., previously a criminal defense attorney, worked very closely with President Trump in 3 of the criminal cases, the legal warfare that was targeting President Trump. Todd Blanche will be the interim Attorney General based on the reporting. We will see who potentially is nominated for the job full time. But the Attorney General role for the president is so personal and critical, not just for the nation, but given what happened with Jeff Sessions, which opened the door when he recused himself, idiot, and opened the door for the Mueller investigation, the Russia collusion, hoax, all of it. That's one of the most important jobs, and also for enforcing the laws of the land and fighting crime and righting all the wrongs of the Biden administration and just the bad cops who are still living.
I'm gonna go smoke a cig on this note.
Inside.
Well, my thought goes to the.
Yeah, let's see in chat. All right. Was today a good day? Was today a bad day for you? How fucking good? How bad was it?
That's the age.
Man, I want to fucking see.
Help push that.
I'm down 2K today. It's not fucking good.
Thanks, Mike.
See you next month. People want to fucking share in the WhatsApp group.
It's literally water.com.
I just wonder on the
I'm having a
Epstein
fucking
side of it,
terrible
like
day
you,
anyway.
Brian, I wasn't in the weeds of it because there was
market,
so much other stuff that was happening news-wise. But we did eventually get the documents, or most of them, that she promised. Is the issue that she didn't put them out there soon enough? I mean, when you start to look and peel back the layers of what was involved in those documents, I know that, there's a need for the American people to have transparency, but it's also, extremely sensitive information also. There was a period where I think victim sensitivity was an issue. And so to your point of it being a hard job, you want to serve the public interest, but you also are making decisions that impact people along the way. And in some ways, that's a thankless job because it's just so difficult to do.
Yeah, and they were scouring thousands and thousands and thousands of records. That takes time, and it takes precision, and it takes absolute perfect execution. They couldn't just openly release it. There are victims in there. There were other people in that needed to be protected. And so she was doing that, exactly to your point, you know, and maybe the public just didn't understand they want it now. If they want it now, they want it now.
And the Democrats were, pushing it and going hard and saying Trump's going to be in there, and they're covering it up, and they made it a whole thing.
A whole narrative.
But so did Republicans, because the committee that voted to subpoena Bondi included Nancy Mace, Lauren Boebert, Tim Burchett, Michael Cloud, Scott Perry. So it was a bipartisan issue. And I wonder if that, I mean, she was supposed to testify or be deposed, I guess. It was April 14th. I mean, so that, I think that was sort of a gathering cloud that maybe that Trump didn't, maybe it's still going to happen. I don't know. I don't know if the subpoena doesn't go away, but it was becoming a big bipartisan issue in some ways.
The Attorney General role is critical from a business
I don't have
perspective.
SIGs. I'm a
And
piece of
from,
shit.
you mentioned
Piece of
the
lying
fraud
fucking shit. I tried finding a
investigations
SIG button.
for a
There's
nation
no
that's so
SIGs.
deep in debt, to make sure that we're not,
Fuck me.
that our money, our borrowed money is not stolen, misused, abused, but also to ensure that there is fairness in our legal system when it was used as for political warfare. The Department of Justice was used for political warfare to go after a former president, a presidential candidate, and anyone that they didn't like who was on the right. And that is a fair justice system is the only way that you can operate a business in the United States.
And Susan Rice is already saying they want to do it again. They're already thinking about who they'll go after when they do have power next time.
There are reports, several reports from different publications that President Trump on Tuesday met with Lee Zeldin, former congressman, currently boss of the EPA. He was discussing last year's California wildfires, and he also just discussed, according to reports, the potential for tapping him for the Attorney General role. That's according to reports. And our own Aisha Hasni on the news channel actually spoke with Pam Bondi just a short while ago. She said she was working in Florida filming a PSA involving about abducted children and for the NFL, and she flew into Tampa this morning and went straight to work. So no comment on the firing. Let's go to Edward Lawrence, who's at the White House with more. Hey, Edward, what do you know?
Yeah. Hey, Diggy, I can add a little color to this. I was actually in the office there when President Trump spoke with Peter Doocy on the Fox News side related to this. Now, the president wanted to stress, basically, there's no bad blood between the two of them. They just decided, or he decided, that Pam Bondi would be better in another role on this. She is okay with the decision, as far as the president has said on this. And as you know, Todd Blanche, the number 2, currently will be the interim Attorney General. There's no decision yet. The president did not decide who permanently will replace Pam Bondi, but at the moment, Todd Blanche will be the interim member of that running the Attorney General's office. So again, the president's stressing this is just moving to another role within the administration. He felt that it was time to do that. She ended up taking, as much incoming bad press as he did on a number of the subjects, especially when you talk about the release of the Epstein files, when you talk about some of the other things that she did. But she was in lockstep with President Donald Trump with all of his agenda items going forward from the moment she took office as Attorney General. But again, this is being described now as just moving her to another role, but there's no bad blood between the two of them, as you reported there to Aisha Hasni saying that Pam Bondi is back to work today, down filming a PSA for the NFL. Back to you guys.
And Edward, but any other, just you're covering the White House so closely, why now? Why send her out of the AG role now? And to your point, Kristi Noem, not the head of DHS any longer. That's Mark Wayne Mullen as the secretary, but she's still within the fold in the administration, just in a new position that the president created. But why now for AG Bondi, former AG Bondi?
And this has been talked about for several weeks or so, is my understanding, about possibly there could be a move in role related to this. Is there a trigger that it's why now? I don't think that we have seen one as of yet. You'd have to ask the president, which he did not indicate why exactly now is the time. But this has been sort of talked about to move her into another role related to this. Again, not a firing. The president's describing this as just moving her to another role. So she's still within the fold, as you mentioned, of the administration. But there wasn't one trigger that did it. Now, we know with Kristi Noem's situation, there was a lot of hubbub behind the scenes, and she had some issues, publicly issues with some of the folks on her staff related to getting upset about a pilot leaving a blanket or someone leaving a blanket on a helicopter. So there were triggers for that sort of removal from office. This one, there isn't just one trigger that said, okay, now is the time. But this, again, it had been talked about.
Oh, and with Noem, you left out the more than $2 million that she spent on a
ad campaign.
The fuck is this bullshit?
Another major shakeup at the White House. Attorney General Pam Bondi has been ousted.
Let's go now to CNN senior White House correspondent Kristen Holmes. Kristen, tell us what you're learning. This is brand new.
Yeah, things are very fluid. They're moving very quickly, but I am told that Pam Bondi has been officially fired. She's out of her role. Now, where she goes next, that is a question mark. I was told in the meeting or in the conversation President Trump had with Bondi yesterday, he floated the idea of a judgeship as a potential landing place for Bondi. And in the interim period, while they are figuring out who is going to take over as Attorney General, Deputy Attorney General Todd Blanche will step into that role. So he will be serving in the interim. Pam Bondi, though, is out. We had already reported that she was in Florida. We have been talking about for the last several hours how in the last week, President Trump had been calling allies, asking about firing her, who should replace her. It doesn't seem as though they have someone specific in mind. We know that they have floated the idea of Lee Zeldin, among other people. Zeldin is currently leading the EPA, but I am told that is not a done deal. President Trump, interestingly, did issue a very flattering for President Trump's statement about Bondi last night, saying Attorney General Pam Bondi is a wonderful person and she is doing a good job. The reason that I note that is that because when we saw Kristi Noem being fired, there was none of that kind of generosity of spirit when it came to President Trump. Now, just a reminder, Bondi has a very close relationship with Susie Wiles, the chief of staff. They're both political operatives in Florida. They kind of came up together, so they have a long-lasting relationship. But President Trump had grown increasingly frustrated about a number of issues. One, didn't believe that some of the cases against his adversaries or political adversaries were being brought fast enough. He didn't believe that she had handled the Epstein files well, among other things. So we do know they had this conversation yesterday in which essentially President Trump told her that she was not long for this world, that he would eventually be replacing her. What we know now is that she has been officially fired. And again, Todd Blanche will step into that role as the Deputy Attorney General into an acting Attorney General role.
And Kristen, this now marks the second cabinet position that Trump has fired and now has sought a replacement for within the last month. What can you tell us about Blanche himself, his relationship to Trump? Obviously, he's going to be in the acting role until a new attorney general.
Honey, look who's here. Heard you got a new deck.
Wow, is that our deck?
Yeah, it's a deck warming gift. Took several hours to get the icing right.
With decorators, the neighbors will notice. Decorators stand out.
¿Quiere arreglar sus papeles, pero ha escuchado que no califica para nada? Soy la abogada Ángela Lisinski, abogada de inmigración dedicada a arreglar papeles para la mayor cantidad de personas posible, especialmente.
Is put in place.
Well, look, Blanche and President Trump are incredibly close. He served as his personal attorney before taking this role as the Deputy Attorney General. And there are a number of people who are around President Trump's orbit who have said that Blanche isn't political enough. Well, we saw Blanche taking a new role recently when he stepped out at CPAC and essentially said that everybody who had ever investigated Donald Trump or brought charges against him had been fired from the Department of Justice, making the Department of Justice clearly very political. And President Trump has liked what Todd Blanche has done. Blanche has always been kind of viewed as the person in the background making all of the mechanisms work. Now, of course, he'll be front and center, but it doesn't sound as though he's going to take this position long term, that they are going to still find a figurehead, so to speak, as the actual Attorney General, but that he will be filling in the interim time period. And I do want to note, one of the things that's so fascinating about this removal of Kristi Noem and this removal now of Pam Bondi is that we spent the better part of over a year with no upheavals, with no turnover within the cabinet, and that was intentional, something that President Trump, Susie Wiles, did not want in his second term to look like a revolving door, the way it had looked in President Trump's first term. But obviously now we are entering a new phase of President Trump's presidency, with him feeling as though the people who aren't working, and he's going to get rid of them.
And Kristen, how long was this coming? Because there was a sense, certainly when Pam Bondi appeared before Congress and testified, that she was really trying to appeal to President Trump and that she might have been on thin ice at that point.
So it kind of depends on what you mean in terms of how long has this been coming, because there has been frustration with Bondi off and on since almost the beginning of President Trump's tenure, specifically when it came to the handling of the Epstein files. There was a big swath of people, and obviously we saw the Chief of Staff, Susie Wiles, had said that in the interview with Vanity Fair when she said the Department of Justice whiffed on the Epstein files. There was a general feeling that that was the case, and they placed a lot of that blame on Pam Bondi, not on Kash Patel or on Dan Bongino, but on the Attorney General, because she was the one who was responsible for bringing in all of those influencers
shit is wild,
and giving them those binders, if we remember that from early in the administration. She was also the one who said on Fox News that she has the Epstein files on her desk and she'll be releasing them soon. All things that put everybody into a tight spot and then caused enormous amount of problems down the road. But when it comes to actually replacing her, what we're told is that in January, this started becoming a real conversation, that the names started floating around as to who would potentially replace her. Now, that had died down a little bit, and then in the last week ramped back up. And I'll tell you, I was getting calls and text messages from people who aren't in the administration, who don't work at the White House, who were saying that they were hearing it. And they were hearing it because President Trump was making calls really starting on Monday, asking allies what they think about the fact that he might replace her, who should replace her, what does this actually look like? And that is when we really saw, obviously, all of this kind of snowball leading to a conversation between the two of them and then her ultimate firing.
Kristen, please stand by for us. We have some extra voices to add to the conversation. Evan Perez, Jeff Zeleny, and Ellie Honig are with us. Evan, first to you. You could see this coming, but we weren't sure. Earlier, it was described as a gray area that she was in, that she might be able to salvage her job. Clearly, she couldn't.
Right. I mean, look, Kristen is what Kristen describes is what we've all been going through since January, when these rumors first came up. It appeared that the president might actually do it in January, and then it died away. And we, as you know, from covering the Trump administration, you just never know whether it's real, whether there's just a faction inside the White House. They spend a lot of time knifing each other, and so we never know it's real until the president actually latches onto it. And so that's when it really became, it appears, a lot more real this week, when he was seeming to take action to try to find some names of some possible replacements. For Bondi, what we've seen is she's taken a different tack from what we've seen in the previous administration, the first Trump administration. When Bill Barr and Mike Pompeo fell out of favor, one of the things they did was they avoided Trump. They just reduced their amount of exposure to him as a way to sort of like let it let him sort of calm down. Bondi has taken the opposite tack. She has spent a lot more time with him. She's seemed to try to be more present as a way to ingratiate herself with the president. In the end, it did not work. And really, the original sin goes back to February of last year, when she orchestrated that event at the White House with these binders with documents that were years old. They'd been in the public sphere for years, and she didn't seem to know that. She didn't know that. And at that time, if you remember, the administration is new in office. There is really no constituency. There was nobody demanding the Epstein files. And she created this event out of nowhere. No one really was expecting that. And so they have not been able to live down that moment since. And the damage to the president because of that, I think, has been incalculable, because, MAGA base has not let it go.
She wasn't the president's first choice for this job. Let's remember, it was Matt Gaetz, who could not be confirmed. That was not going to fly. And now I wonder, Jeff, how tough it is going to be to confirm someone to replace her, considering there are a number of senators. She and Kash Patel were put in their positions with promises of not going to retaliate or use DOJ or the FBI to go after President Trump's enemies. And yet we've seen that is exactly what it has been used for. So I wonder how difficult this process will be to find someone to replace her.
I think the confirmation process will be very difficult and dramatically different from what we've just seen with the Secretary of Homeland Security, Mark Wayne Mullen. Even if a senator happens to be chosen, and a few have been mentioned possibly, one is going to be very reluctant to accept this position, because Attorney General is different than every other position in the cabinet. And there's enough muscle memory now, beginning with Jeff Sessions, who could not be any more loyal initially until he fell out of favor because he recused himself. And that's something that the president still has in mind. He will choose someone who will never recuse themselves from anything. So I think that these confirmation hearings for the next attorney general will be dramatically different, largely because of what Evan was saying, everything that has been learned over the last year. The Epstein files are not going away now. That genie is well out of the bottle, regardless of who the attorney general is. So I think it's very difficult. But to your point, I was thinking the exact same thing. She was not his first choice. He knew her well, obviously. She was involved in the campaign from Florida. Wasn't inherently a political years ago, became very political. But she was not, she was chosen because she would be reputable and pretty easy to be confirmed after Matt Gaetz. So it's going to be fascinating to see who the president picks. Lee Zeldin is one of the leading contenders, a former member of Congress, different for a House member than a senator we've seen over the years here. So the confirmation process, I mean, get ready for this. It is going to be much more complicated than the one we just saw last week.
Meet Milo, Lowe's all-new AI-powered home improvement helper.
Oh my God.
Because Lowe's knows owning a home
I have a question.
You can ask me anything.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone.
And that's President Trump addressing the nation last night on Iran, assuring the American people his goals are near completion. But keeping Iran on notice, China is now trying to play peacemaker. Beijing and Pakistan issuing a joint 5-point initiative to restore peace and stability in the Middle East, it claims. Top diplomats are meeting in Beijing after Pakistan hosted talks on Sunday, which did not include the U.S., Israel, or Iran in those talks. Beijing also hosting quote-unquote peace talks between Pakistan and Afghanistan in China yesterday. Joining me now is the Gatestone Institute senior fellow, Gordon Chang. Gordon, good to see you. Thank you so much for being here. China is trying to appear to be some kind of a peacemaker. Is anyone buying it?
Not really, because this ceasefire plan is not in the interest of the United States. So, for instance, it would leave Iran in possession of its enriched uranium and its missile program. And those are the reasons that President Trump stated last night were the reasons for hitting Iran. So that would undercut President Trump's rationale for the war if he accepted the ceasefire. So I suspect that it will not go forward. Some people say that it will, but I don't think that it's in the interest of the United States or the international community. Certainly in the interest of China, but not in ours.
Yeah, great point. And of course, the president also commented on the Strait of Hormuz last night, and he asked allies to get some courage. Watch this.
The United States imports almost no oil through the Hormuz Strait and won't be taking any in the future. We don't need it. The countries of the world that do receive oil through the Hormuz Strait must take care of that passage. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the Strait will open up naturally. It'll just open up naturally.
Your thoughts?
Well, right now, Iran is getting its ships through the strait, and it's charging the equivalent of $2 million in renminbi, by the way, China's currency, for allowing ships to go through. China actually, ships are transiting the strait, as we saw on Monday when 3 Chinese container ships made the southbound passage. At this point, our ships aren't getting through, and this is not a good situation for the United States because, among other things, we are allowing Iran to finance its attacks on us. And by the way, we're not giving China any incentive to help us because they're getting their ships through and other countries are not. So this is not a very good situation for the U.S.
Well, we just showed the FT op-ed this morning where they write, Beijing will seek to replicate Tehran's playbook in the Taiwan Strait, and the global economic impact could be even worse. Xi Jinping inviting Taiwan's opposition leader to Beijing. The KMT party is said to seek reconciliation with Beijing.
At this level,
and they represent mainly ethnically Chinese voters in Taiwan, making up less than 5% of the electorate. China, explain this one, Gordon.
With this law.
Well, Chen Li-wan, the head of the Kuomintang KMT, is going to China for a 6-day trip starting on the 7th. And what she's going to do is to play into Beijing's playbook, essentially amplifying their propaganda narratives. The KMT has blocked in the legislature because it's basically has a lock on the legislature, though not the presidency. The KMT has blocked funding for enhanced defense programs. And that, I think, makes war more likely. Although the KMT says that it's in favor of peace and reconciliation, you can only have that if Taiwan is strong, and they're preventing Taiwan from defending itself. So this is not a good situation for the island.
Yeah. Meanwhile, China is building another massive base in the South China Sea, which could provide more room for missiles facilities, Gordon. They act like the South China Sea is Chinese territory.
Yes, and that's actually where I think the risk of war is highest because we're seeing extremely belligerent Chinese activity in the last couple of weeks against the Philippines at places like Scarborough Shoal and Titu Island. These incidents can blow up into a conflict, and we have a mutual defense treaty with the Philippines. So far, the Chinese think that they can push the Filipinos around. Filipinos are pushing back. This is a volatile situation, and the United States needs to start paying attention to it.
Okay, and meanwhile, we've been talking about birthright citizenship this morning. The president attended the Supreme Court's oral arguments yesterday on birthright citizenship. The first time a sitting president has done so. The New York Post writes this: China has exploited the liberal interpretation of birthright citizenship to maximum advantage. Back in December, the Wall Street Journal reported that nearly 41% of international surrogate parents are Chinese. And one Chinese billionaire, one individual, potentially has 100 U.S.-born children through surrogacy. This is just an incredible story, the way China has exploited America's policies. And I spoke with Peter Schweitzer about it back in January. He told me all about it. Watch this.
Stay in control with next day delivery on most orders. For your shutoff valves, call, clickgranger.com, or just stop by.
China has a very sophisticated program of exploiting birthright citizenship, and the Supreme Court's going to be hearing this case. Our federal government has no idea how many children are being minted as U.S. citizens using this technique, but China has looked into it. China has encouraged this. They've pushed it. The Chinese government believes that every year for the past 13 years, Maria, roughly 100,000 Chinese babies have been born in the United States that are then taken back to China, raised in China. When they turn 18, they're going to be U.S. citizens. They can vote in elections, donate to political campaigns, get government jobs. That's more than 1 million voters. Remember that 2016 election was settled by 80,000 votes. So it's a massive exploitation of our immigration laws. Other entities like the Muslim Brotherhood and the Mexican government are doing the same sort of thing.
Gordon, this is such a national security issue. I mean, think about that, these Chinese people can come here, have babies, take the baby back to China, raise the child in China, and then they can do whatever they want. They could come back. They could go work in the military. They could like he just said, vote. I mean, your reaction?
Well, first of all, Peter Schweitzer is a hero. But we got to remember that the Chinese are exploiting something that Congress permitted. We have a visa waiver program in the Commonwealth of the Northern Marianas, a compact state of the United States. This was, Congress has had so many opportunities to close this and hasn't. So, Maria, this is on us. We know what's going on. And Congress has absolutely refused to close the visa waiver program. We could do that immediately. So, yeah, the Chinese are taking advantage of this, but we've created that advantage and have absolutely refused to do anything about it.
Unbelievable. Well, we'll keep watching this one. Gordon, great to see you. Thanks so much, Gordon Chang. Welcome back. Speaker of the House Mike Johnson and Senate Majority Leader John Thune working on a new two-track plan to end the record-long partial shutdown at the Department of Homeland Security. It would affect all of DHS except parts of ICE and Customs and Border Protection. That funding would be handled later through a reconciliation package, bypassing the filibuster. The president endorsing the plan, writing on Truth Social, "I am asking that the bill be on my desk no later than June 1st. The Senate convening last hour for a pro forma session, sending their bipartisan deal to the House for a second time. The House will meet in about 15 or so minutes with their own session, all in an attempt to pass a measure with a vote later today to open the DHS. Joining me now is North Dakota Senator Kevin Cramer. Senator, great to see you. Thank you so much for being here. You are right in the middle of it.
Pleasure.
Can you tell us how things are playing out?
Give me one second. It's interesting because the deal that the House is going to have the opportunity to vote on today is the one they rejected, basically, last week. But I think with the president weighing in so strongly, I can't imagine that there will be any Republicans, at least in the House of Representatives, that won't support this deal. It makes all the sense in the world, given the obstruction of the Democratic senators, that this is pretty much the only path we can go on. But we have to get on it quickly, Maria, because June 1st is, that's a couple of months. That's a couple months away, right? And so we have a lot going on in the meantime. But the sooner we can get the bulk of DHS funded and operating normally, the faster we can get to the big pieces of CBP, of course, and ICE, and we can do that with just simple straight line party line votes with budget reconciliation. But the process of budget reconciliation does take time, and that's kind of what the 2 or 3 month delay is it's working the process through so that we can. Well, frankly, so we can fund ICE and CBP, not just for this year, but well into the future, to make sure that Democrats can never do this to the country again.
Well, I mean, look, you say that this is going to be the same bill that the House rejected on Friday night. I mean, I spoke with Lisa McClain, and she was very disturbed by that bill. Here's what she said to me on Sunday. Watch this. Watch this.
Why is filing your taxes with Free Tax USA different? Well, for starters, our premium federal tax returns are free for everyone, no matter what. With a free
Well, I'm not going to roll the dice on passing another reconciliation bill with our national security. We're going to fund it. But explain to me why the funding is at zero in the bill that we got in the wee hours of the night, and that all the authority has been taken away from Homeland. It's not going to happen. House Republicans are not going to let that happen. Let's pass a clean CR for 60 days. Since we're in the middle of negotiation, it's passed the House in a bipartisan fashion. We even had some Democrats come along with us. The Senate seems to be willing to negotiate. Let's stop taking hostages while we negotiate. Let's pay the people, but let's make sure that our borders are secure and the American people are safe.
Do you have the support for a reconciliation package before the midterms?
We have a one-seat majority, Maria. I hope we could do a reconciliation, but hope isn't a strategy.
So, Senator, what about that? I mean, how will this be different? How will this be different than what she was just upset about in the bill that she saw Friday night?
Well, it'll be different in that this bill has passed the United States Senate unanimously with the support of Donald Trump. And what she's talking about, I'd be fine with a 30-day CR while we negotiate, but we're still negotiating with the same people who hate ICE. They don't like law enforcement. I mean, they've squarely put their support behind the murderers and the rapists that have come here. As long as they came here illegally, it seems like violent crime is fine with Democrats. So the reality is, let's take the wins that we can get. and then negotiate the other parts of it. It's really no different other than we're going to largely open DHS, and by the way, still be able to fund with last year's reconciliation package, fund the important enforcement on ICE and Border Patrol throughout at least this fiscal year. So at least we're keeping it open while we negotiate, rather than keeping it closed while we negotiate with obstinate people on the Democratic side in the Senate.
Well, I'll tell you, you are really up against a lot of barriers here with your colleagues on the left. They do not want President Trump's agenda to succeed. I just spoke with Ron Johnson a few minutes ago, and, I said to him, look, I mean, I don't think initially he came into this thinking, I want to take down the filibuster. I mean, I don't think he felt that way for a long time, and I know there's not a lot of support among you and your colleagues to actually remove the filibuster. But when you consider the fact that virtually everybody believes your colleagues on the left will remove it if they return to power. And I said to him, how are you going to feel if, in fact, they do return to power and they remove the filibuster? He said, we're going to feel awful. He said, basically, we're going to feel like schmucks, is what he said, actually, on the air. And we were all debating, oh, God, what does this mean? I mean, I ask you the same thing. How are you going to get around this? How are you going to move forward, move the country forward, when you've got this constant Trump-hating and Trump agenda-hating resistance?
Well, no, for sure, TDS is very, very real, and it's rampant, and it's rampant in the newsrooms across America, even in rural America in some cases. You're always going to have a media that hates Donald Trump, and that makes it difficult. Even at that, though, he's still running the country. He's our president. He won overwhelmingly in the last election, something that a lot of editors seem to have forgotten. However, having said all of that, the filibuster is a thing that small state senators like me value so much, because the Senate itself is designed to level the playing field and distribute power equally in the United States Senate, state to state. That's a really important tool for us. To Ron's point, what I would say about that is that if my neighbor told me he's going to burn my house down tomorrow, I'm not going to burn it down today just to beat him to the punch. I think we have to stand bigger and taller than that. In fact, I think in some respects, Maria, the Democrats are trying to bait us into doing exactly that, so that we'll be to blame for blowing up the filibuster and ruining the United States Senate. But I do think there are Democratic senators, and we've had some conversations just in the last 24 hours with some of them, that are prepared to stand up and say, no, we do not support blowing up the filibuster. And that's really important. I've always thought they're out there. I think that they've had a hard time standing up to their leader on this point, but they're going to have to if they want to maintain the dignity and the integrity of the United States Senate.
Yeah, very good. I like that. I'm glad that we addressed that. Let me get your take on the Clarity Act. Of course, we've been here before. Crypto prices this morning are trading this way, but we continue to face this critical deadline for the Clarity Act in the coming weeks. Are you still trying to finalize a deal over the near term? You've got this key dispute over stablecoin rewards while market structure remains unresolved. What can you tell us?
That's right. Well, the two do sort of go hand in hand. Obviously, we're trying to deal with stablecoin rewards in the market structure bill. And unfortunately, to this point, the crypto side of the ledger has not come on board with the compromises. They think it's too much. But at the same time, Maria, as you know better than anybody probably in the world, our diversified system of financial services with the guardrails that we have, I think, has been the engine of democracy and the engine of capitalism in the United States. We have to protect that. And any other entity, and I'm all supportive of crypto, I'm supportive of blockchain technologies, but if we're going to open things wide open and let somebody compete with our banks that don't have the same guardrails as the banks and the protections for the investors, for the consumers, it's too much risk, and they're either going to have to get on board or they're going to end up getting run over, I'm afraid. So I'm still hopeful a deal can be worked out. What we hope to do is shortly after the Easter break is we're planning a hearing, and that's something I think is really important, Maria, so that the American public and the media can watch the negotiations take place on, in live and in living color, and that I think helps us flesh things out a little bit more. Because you'll always negotiate from your position, your hardened position, I think, apart from the spotlight. But it's time for the banks and the crypto industry and the policymakers to to have this duke it out in public. I hope that sort of breaks up the logjam and gets us to a bill, because we really do have to pass something that protects people, but also encourages the investment that we want here in the United States and not other places.
Of course. I want to move on, but real quick, let me just close this out. I thought it was already agreed upon, Senator, that the crypto players would not pay rewards. Has it been agreed upon?
Yeah, so that's a great point. It's not so much the crypto players as it is sort of the ancillary services, third parties, the PayPals of the world. That distinction is I think what's got people a little bit hung up.
I see.
And
Got it.
It has to apply, I think, to the whole value chain.
Okay, because right now they could pay the rewards because if they've got third-party players.
That's exactly right. That's exactly right.
Okay. All right. We'll keep following it. I know this is really top of
You've
mind.
exhausted my knowledge of the topic.
No, Senator, let me move on to Kevin Warsh. We understand that your committee, the banking committee, has a date. Are you targeting the week of April 13th for Kevin Warsh's confirmation hearing?
Well, that's the plan at this point, but plans get changed a lot. I think it's important to have the hearing. The hearing doesn't need to be held up by the shortage of one vote. In fact, I think the hearing, and Maria, I'm such a strong advocate for complete transparency of the discussions. Obviously, some things are best done privately, but when you get to this point, having the hearing, I think, is important. And I think that will help move the ball forward. Because at the moment that we have the breakthrough, whether it deals with the charges against him getting dropped, or whether it's Tom Tillis coming to a different conclusion, we have to be ready so that there's not a second of gap between the expiration of Jay Powell's term and the beginning of Kevin Warsh's term. So the hearing's appropriate.
Yeah, of course. And, especially when you've got Jay Powell over there threatening that, well, listen, if it's not confirmed, I'm going to stay around. I'm going to stick around.
That's right. And I do think that when people see Kevin Warsh, he's so impressive, Maria. He's got a great background, but he's also he's charismatic. He sounds as smart as he is. And I think that will help. Again, the public hearing, I think, will help add some pressure, even to Democratic members, quite honestly. There's no reason Democrats should not vote for him. And at the same time, with this little intra-party hang-up that we have with Senator Tillis, which is entirely his right. I don't begrudge him that. Yeah. But I do think that we should be able to break the logjam, and a hearing, I think, goes a long way toward that.
Well, I think that's a great point, and we agree on Kevin Warsh. He's been on this program, and he is obviously an esteemed colleague of many on the Fed, and they are looking forward to having him there, too. Senator, great to see you, as always. Thanks so much.
Always my pleasure. Thanks, Maria.
Senator Kevin Cramer joining us. We'll be right
I am not talking about the market right now. I don't. Funds for quite a while, honestly, when these things happen. Fucking crazy oversold.
Damn. It's just literally jaw dropping. Time is 3 and 3 minutes. Time is 3.
SpaceX confidentially filing for an IPO, and reportedly Elon Musk wants 30% of the IPO to go to retail investors. Why and how could it benefit him? Deirdre Bosa has more in today's Tech Check. That may be the highest proportion I've ever heard of, Dee.
It is. You're right, LP. It is. And you know the space very well. So that 30% number is the one to watch here. In a typical IPO, retail gets 5 to 10%. So Musk wants 3 times the norm. And that framing is that this is about giving everyday investors access, but there's another way to read it. Musk has seen what a loyal retail base can do for him. At Tesla, retail owns about 30% of the stock. They backed his $56 billion pay package after a court struck it down, and then they approved a new one worth up to $1 trillion. So that is exactly the shareholder base that he wants at SpaceX from day one. Now, the timing makes sense, too. Retail has become a massive force in this market, more than $300 billion into U.S. stocks last year, according to J.P. Morgan. But until now, that has been bottom up. GameStop, AMC, others. Retail organizing itself. This is different. It's top down, an issuer designing the shareholder base before a share even trades, before it even gets to market. So Musk is trying to build this from the jump. And if it does work, Leslie, it could become the playbook for OpenAI and Anthropic's expected listings later this year. The AI trade at large, it's really interesting to think what this could do to it. It could be priced on retail faith and loyalty, and that's certainly different from what we're seeing on the price, especially for new companies.
Yeah, and historically, retail has served as that marginal buyer on day one, that kind of, especially for a name that's pretty name brand like SpaceX is. Does that maybe pour cold water or pose any risk to that notion?
I mean, there's a question of whether they can actually fulfill this 30% of such a large listing. But you're right, they've been along for the ride, and this is a fundamental change, right? If you want to allocate 30% to these retail investors, that changes the dynamic, right, of the company, the whole makeup of it. You might be willing to vote more with Elon Musk. So it's really interesting to consider whether it actually happens. Speak to some people who say kind of like, yeah, right, it's going to be hard, or you're going to leave them with the bag if they do that. So we'll see how it all plays out.
Yeah, it's definitely an interesting idea. I'm very curious to see how it works, especially on that first day of trading where retail can come in and really make a difference there. Deirdre Bosa, thank you so much.
More boxes, more options. Grainger has over 7.
I'm on my phone, so I'm going to play this shit.
India's expanding ecosystem. So joining us now to tell us a bit more on this is Stephen Dickens, CEO and Principal Analyst at Hyperframe Research. First and foremost, thank you so much for joining us on this Thursday, Stephen. I mean, there's so much to dive into between like the SaaS apocalypse, some of the repricing we've seen, and memory as of late. I know that doesn't necessarily really snag on overall that super strong narrative, but there's so much to dive into. So when you look at the tech landscape right now, broadly speaking, what sticks out to you?
Well, Jenny, obviously AI is the key theme, whether that's low down the stack with IBM inking deals with ARM today to power that innovation, whether that's up at the device drivers. NVIDIA made some great moves at a big open source event last week to kind of continue to strengthen their moat whilst also donating to open source. Then you look at CapEx build out, looking at what Oracle's doing, deploying $50 billion worth of capital that they've recently raised. CoreWeave just did a huge $8.5 billion raise, and they're going to be deploying that. So I think depending on where you look up and down the stack, AI's the news.
All right, Stephen, let's look at some of these one by one. Let's start with Oracle. You mentioned the $50 billion CapEx. A lot of it on data centers, a lot of this on things that they've already kind of promised as well. At what point does it stop being a growth accelerator and start becoming more of a balance sheet risk for these investors in Oracle shares?
So for me, Oracle's a play on a number of different fronts. They've got a traditional business. I was out with their database team earlier this week. That's a fantastic franchise. That's where all of the enterprise data fits and sits. Fortune 5,000 companies using that platform at scale to support their data and to support their build out. Then you look at what the Oracle Cloud Infrastructure team is doing. They're posting numbers that are probably double what we're seeing from other hyperscalers. So I think in their last quarter it was north of 80%. When you look at for growth on Oracle Cloud Infrastructure, OCI. When you look at that in comparison to the Microsoft Azure, AWS, Google Cloud platforms, they're tracking in the 30% range. So I think we can now call Oracle a hyperscaler at scale. There's some other things that the company's done around deploying its infrastructure into its competitors. So I think you've got to look at Oracle in the round. When people look at it today, they look at it as building out AI infrastructure and almost treat the company like a neo cloud without realizing that they've got an enterprise software stack. They've got ERP, CRM, a whole raft of data solutions. So also the Cerner business for healthcare. You look at this business and it's really broad with a lot of cash generating parts to it. So I look at the short-term raise as an investment decision to back AI and to strategically get into that and build out that infrastructure globally. But I think you've got to look at the repayment of that debt, not just as being borne by their relationship with OpenAI, for instance, and the backlog for AI. We seem to be having a singular conversation around Oracle, not looking at their breadth.
Okay, I think that's such an important, really way to start our conversation. So I wanted to shift into a bit more NVIDIA, which is pushing up hard right now with open source, while also maintaining some tight control of its hardware stack. And so, in your opinion, does this strategy strengthen its moat long term, or does it eventually create room for competitors to, say, catch up, which is something we've been talking about for years and frankly hasn't happened yet, but obviously still stands to potentially occur?
So, Jenny, it's 2026. You can't have a conversation about tech without talking about NVIDIA. We're a while on now from GTC, and still the buzz is and the momentum. All of the vendors made huge announcements in their collaborative efforts with NVIDIA. But one that stood out for me last week at a big open source event with 13,000+ attendees was NVIDIA just rolled out that their RDA driver, they were going to donate that to open source. On one level, you can see that as, hey, they're trying to be a good steward of this technology, and they're trying to sort of get people to leverage it and use it and do that in an open source way. The other way you can look at it is Jensen playing three-dimensional chess to lock people further in to the NVIDIA ecosystem and the NVIDIA way of doing things. So whilst that layer's been made open source, it's still further up the stack and below, down at the GPU and silicon level, locks people into an NVIDIA play. So I think a smart move there. They've got a huge moat, 90% market share plus in GPU. But I'm also seeing the likes of AMD. We're seeing Intel start to come into this place. We're going to talk about IBM and its play for silicon and what it's doing with ARM. Then you've got the hyperscalers with Inferentia and Trainium from AWS, TPU coming from Google. I think if you wind this clock forward, it's going to be a rising tide raises all boats. Still see NVIDIA with a leadership position, but other players are going to bring and come through to have their fair share of the rising tide of all AI workloads.
All right, let's talk that IBM ARM partnership deal. What is it? The Z mainframe, bringing that ARM capability into that. Now, for those of us that still have, hey, memory's not as good as it used to be, but I still remember, I don't know how many quarters in a row of revenue declines and misses for IBM, and I can't get that out of my head. Is there a real growth story here, or is this just kind of playing defense in a company that's been under a lot of pressure over the last couple decades in the case of IBM?
So I think you're characterizing it right there. But if you look over the last year, this company in its last quarter posted double-digit growth. Easy for me to say. We haven't seen that in a while from IBM. The company is now radically different to where it was even 5 years ago. You look at the acquisition of Red Hat. You look at the acquisition of Confluent that's just closed recently. HashiCorp, Apptio. There's a whole raft of software portfolio that Rob Thomas has built and has acquired under sort of Arvind Krishna's leadership. But the announcement today is around the deal they've done with ARM. IBM's one of those three people who are driving intellectual property for me in the semiconductor space. They don't get the credit they deserve for this. They've got 2-nanometer IP. They've got a huge team based out of Poughkeepsie, New York, who do semiconductor development. And the Telum 2 processor that ships in their mainframes is the fastest commercially available processor on the market at 5.5 gigahertz. This deal with ARM is interesting. Whilst IBM's been in that infrastructure space now 60 plus years with its own silicon on the mainframe, there's always been a challenge around the long tail of software support. So this announcement with ARM will effectively mean that they've got a dual processor architecture chip, so they'll be able to run the mainframe workloads on one processor, and then those more commercial and more longer tail of ecosystem software on the ARM processor. This is great news for IBM.
Market is in rally mode, party mode. Jesus fucking Christ. They didn't even touch this purple box yesterday. Touched it today. I sound fucking wild. What the What am I doing? Oh my god. What do I say? Oh. Uh. Ten.
Now for our 360 round. For that, let's bring in our panel to discuss the latest in oil. Ben Cook joining us now, portfolio manager at Hennessy Energy Transition Fund, and Dryden Pence, the chief investment officer at Pence Capital Management. Great to have you both with us. Very interesting setup today for this conversation. I'm looking at oil right now, WTI at 111 right now. We're up almost 11%. Brent at 107. So we've surpassed it in terms of crude prices. We are now north of Brent. So Ben, let's start with you. With us holding firmly above 100 and watching WTI go over top of Brent, what's sticking out to you right now? How are the markets assessing this situation from your viewpoint?
Yeah, good morning. Thanks for having me. Look, this is a headline-driven market, and I think the reaction to the Trump speech last night speaks to the administration's resolve to see a change in Iran, and that includes escalation in military activity, potential boots on the ground. These are all real scenarios that the market has to digest. And I think what it means ultimately is that the magnitude and the duration of this supply outage is likely to magnify and continue. And that's the reason for the upside in the commodity today.
And Dryden, you're much more constructive in the notes that you sent over. Do you think the markets are actually overpricing the risk here, given the resiliency that we've seen through much of the economy?
Absolutely. This is a traffic problem. It's not a supply problem. And so when you have a global commodity, we're somewhat traffic constrained. We have a hall monitor sitting on top of Straits of Hormuz. What we need to do is remove the hall monitor and everything works out. And so the point is this isn't like the Ukraine war where you had a supply problem. We have plenty of supply. It's just a matter of getting it to the right place. So that means once this temporary hall monitor situation occurs and is over with, things are able to return back to fairly normal. We'll be elevated, but we're not going to be elevated at 100. We'll probably fall back down to the 70, 80. It won't be the 40. It won't be the 50 to 60. It'll be the 70 to 80. And at $80 a barrel, the world's in pretty good shape. So I think that this is more of a temporary set of circumstances, and we're far more constructive on this. This doesn't change our view for the whole year.
Now, Ben, you have a slightly different viewpoint here. You are calling for sustained triple-digit oil with potential spikes here. What's your worst-case scenario, and what's your response, I guess, to what Dryden just said there?
Well, I think there's some truth to what Dryden's saying. Look, if you look at the futures market next year, the price, average 12-month price in 2027 is roughly 65. So the market is anticipating some calming and actual supply improvement into next year. And I don't think anyone in the marketplace today expects that we have a continued outage of the current magnitude into next year. I think there is an expectation for resolution. But look, the reality remains, if you're out 12, 13 million barrels per day, as we are right now, of crude oil, and 3 million barrels a day of refined product, there are significant inventory impacts that will require a lengthy period of time in order to restore those impacts. And so, what we're saying is, as long as this conflict continues and inventory levels continue to be depleted, that's just going to be that much more time that's required to build those inventories back. The market will price itself on days forward cover of demand. And as long as that inventory levels is reduced, prices will need to be higher to incentivize additional supplies back in the market. So, if this goes on another 2 to 3 weeks, we could easily see over the next 6 months an improvement in pricing to the downside for the benefit of the consumers around the world. But the reality is, as long as we see the outage on the magnitude that we see today, there is the real tangible impact to inventories that will support higher pricing, potentially over $100 per barrel. Look, it's not out of the question. We saw the Russian-Ukraine impact back in 2022. Prices reached $130 a barrel, stayed over $100 a barrel for a quarter or so. But those are real impacts that the market will have to resolve over the longer term.
And Dryden, one place we are seeing the immediate impact is in gas prices. I mean, we're nationally north of $4 a gallon here. How concerned are you about a potential uptick in inflation? And what does that mean for the Fed from your viewpoint?
Well, I think the Fed is probably, the Fed's not going to raise interest rates. I think they may be on hold about lowering interest rates, but I don't think they're going to be raising it. So I think we'll be maybe having a longer extended period of stable interest rates where we are. But when we talk about local domestic gas prices, I mean, again, these are probably fairly short-term things. When you see gas prices above $5 a gallon, we see demand destruction. I mean, Bubba turns to Leroy and says, we're going to take in your truck today. I mean, and what happens is people that don't normally carpool start carpooling. We've seen this. $5 is the number, and once you hit $5, then behavior changes dramatically. People start carpooling, demand destruction occurs, and it comes down. But I think all of this is based on a situation of time, and it's just a debate of whether this is a 60-day phenomenon or a 6-month phenomenon. And I'm on the side of it's more like 60 to 90 days. You're already having agreements or things with countries, with Iran, even under their current regime, of trying to figure out how we get more oil through. They need the money more than everybody needs the oil. And so economics is going to win over politics here one way or the other, and it's going to do so quickly.
Well, I really appreciate you both being with us today to take a closer look at oil and oil prices. Right now, we're looking at WTI crude at $111.48 a gallon. Brent is at $107.81. Thanks to Ben Cook, portfolio manager at Hennessy Energy Transition Fund, and Dryden Pence, chief investment officer at Pence Capital Management.
652.2. November 20th level somewhere. Coming into play like so.
Right here, we do have some breaking news out of Washington. Eamon Javers has that story for us. Eamon.
Leslie, a White House official confirming to
Back some news in the deal-making space today. Amazon reportedly in talks to buy Globalstar, and this would be a big boost to its LEO business that it was hoping will rival Starlink. Amazon declining to comment on this particular report here, but it could be a big deal. Joining us now to break down what it could all mean for us is CNBC correspondent Mackenzie Sagalos. Mac, this could be a kind of boost, right, in this race that Amazon is trying to put up there in terms of a constellation of satellites against the likes of Starlink and everybody else out there.
Absolutely, a boost that they really need. So satellite telecom company Globalstar is now very much at the center of these space internet wars. You saw shares in that company jump on the report that Amazon's weighing a $9 billion deal for the company, a move that could give it that meaningful boost that it needs to Project LEO. That's Amazon's satellite venture that's targeting commercial service later this year. So far, though, they've only launched 200 low Earth orbit satellites, have been hitting multiple delays, and recently had to ask the FCC for an extension of a key deployment deadline. Still, Amazon's trying to take on SpaceX's Starlink with this, which has a multi-year head start and a massive moat with roughly 10,000 satellites in orbit and more than 9 million users. SpaceX also reportedly explored a deal for Globalstar last year, and that's notable because this company only has 48 active satellites. So its appeal isn't scale, it's the fact that it has spectrum licenses, operational experience, and crucially, direct-to-device capability, which lets you connect a phone straight to a satellite without a separate terminal. That is a market that Starlink has been chasing, which is why SpaceX was interested in them. And another potential roadblock here, Dom, Apple owns a 20% stake in Globalstar and is reportedly making these late-stage talks harder to close.
Mac, just how much could a deal, hypothetically like this, change the competitive dynamic and tilt it way more in favor of one versus the other? We know that Starlink has a massive head start in this whole process.
Right. So, I mean, Amazon has been, it was originally called Kuiper, now it's called Project LEO. This has been an ambition for them for a few years now, but they've been struggling in part because their launch partners aren't getting enough satellites into space, which is why they're out to the FCC looking to get this extension, because right now, by July 30th, in order to keep their license with the FCC, they need to get 1,600 satellites into space. But it's typical that you'd see delays. SpaceX is trying to block that extension. But the goal remains the same. Get commercial service up and running by the end of the year. And where this company and where this acquisition could be especially helpful is on the license side of this. So yes, it only adds 48 satellites to their total, but it puts them at a head start in terms of some of the operational capabilities where they need to close the gap.
All right. Mackenzie Sagalos here with the latest on deals and satellites. Thank you very much, Mac, for that.
You're not just moving, you're moving in the right direction.
How am I going to play soccer in Connecticut?
When life
I just broke my. I don't even know. It just happened. market is closing like this, what to say? I don't know what else. I don't know if I want to fucking exit everything and re-enter on Monday. No, I'm just gonna keep it. Man, I need to fucking do this text. Fucking vertical flag up SPY today. God damn. Someone sent a fucking picture in the WhatsApp group. That's crazy. How much is that, bro? Holy. I can't lie, my shit looks exactly the fucking same. Down 2 point something K. This shit is a fucking sick fuckingness. I'm saying, should I say to fuck, what am I fucking doing? What am I trying to say? Why? What is manly manly man Power imbalance time. Power imbalance time. $350 bullish candle. What a shitty day. God damn. Fucking bullish breakout into close. Shit is so fucking 2 days in a row. It's a crazy fucking close. Don't know how to be happy about bullshit. Holding like fucking crazy, man. Ah. What's wrong with me? fucking bad day. Yeah, have a good weekend, everybody. Have a good Easter weekend. What in the shit? Wow. I'm doing 1.2k and 655 puts, 1 DT. Yeah, alright. Have a good day, guys. Wow. I got